Step up, traders, time to roll. Numbers shaking down the scroll. Clock is ticking, you
I still don't
know. Welcome
my PC is freezing right now.
market show. Oh, yeah.
I'm fucking furious, man.
Monday to Friday.
It shouldn't be this hard.
Captain Jim James, help you cut that dry. Charts are jumping, green and red glow. He's steering this ship on a stock market show. It's a stock market.
I think I need
Where the bulls run wild. The bears lay
a PC just froze like 30 seconds ago, a minute ago.
ride that wave on a stock market show.
I wonder if the fucking 5080 is bad.
Got your watch list ready, got your game face on when the
Check 1 2, mic check.
he keeps you calm from the open road. Straight goes, he's calling the shots on the stock market show.
Oh, I gotta turn that up too.
It's a stock market show.
Check.
Where the bulls run wild.
New all-time high in the overnight.
Close and go, ride that wave on the stock market.
They're gonna clean all that up, aren't they? Check, check, check.
Log on, lock in, get that trigger pulled on. TraderTheTrigger.com. TraderTheTrigger.com.
Good morning out there. How y'all doing? My office or my setup here is like imploding on itself, and it's not stopping. And now I'm having issues with my PC too. Streamlabs is like committing seppuku and PC committing seppuku, so I apologize to you if I lose the stream today. Just 5 minutes ago, my PC froze. I just changed a bunch of stuff yesterday. I got a new power supply and installed it, and then new capture cards and updated drivers on all my devices. It took all day long, and I'm still having issues this morning. And it's so bad that I think that I'm gonna have to bring the PC back. I have a warranty on it. It could be because these 5090s and the 5080s have had problems. So just bear with me today. We're gonna try to get through Friday. I think today's Friday, and we're gonna try to get through today to get you set up for the weekend, so that hopefully I'm can un-F this by Monday. It's been brutal this week. I'm having and they're cascading issues. It's like started with small things, and then it's becoming bigger and bigger. So there's something going on. And I've got more problems than that. Like I tried to do a report to the devs at Streamlabs, and the report crashed as well. So I'm not winning here. It's like losing. And I just need one W, and it hasn't happened yet. Even this day's Friday, I think. So it's been like a whole week of, hey, buddy, what are you doing? Henry. So let's get into it right now. We have a bunch to look at this morning. Let's go over. Sweet. I was hoping that I wouldn't lose Bookmap this morning. So luckily that's here right now. You gotta understand that like just that one PC I think total cost me, I don't know, at this point it's probably cost me $5 or $6 grand. So it's not cheap stuff, and when it's not working, it's very frustrating. Okay, so and the worst part is well, there's another, not worse, but I thought I fixed it earlier this week, but it's still not a solution. They're like, oh, do this and do that, but then it's temporary fixes, band-aids over shit that's janky. I'm gonna try one or two more things over the weekend. I'm gonna try to switch over to OBS Studio from Streamlabs OBS to OBS Studio. It's a little bit more lightweight, and that might help. I'm hoping that might help. I don't know for sure. I've done everything at this point. Like, I don't think there's anything that I haven't not done or tried. So bear with me. We should be through this over the weekend. I'm hoping. Now we have to take a look at the market here. If on a weekly basis, if you were to look at SPY, SPY, on a weekly basis, it was this morning. It was like a hanging candle. Hanging candles usually, or I would say they used to matter, and they've mattered less in recent memory, the last 5 years or so. I went back and looked at hanging candles on a daily basis and on a weekly basis, and they used to have an edge. They used to be able to get like 7 out of 10 of them would print to the downside if we had a hanging candle. It didn't matter if it was green or red. No matter in that. Hanging candle is something like a or an indecision candle. You should have like a prior day or a prior week high, and then the next candle would be something underneath it, like this, like an indecision. And these can be, they can be down here, they can be up here. At any rate, the weekly is in a hanging position right now, and this week needs to close today, in my view at least, even with the squeeze in the overnight, needs to squeeze to a new weekly high. I would like to see that. And the reason for that is because we're losing daily velocity. Number one, on one hand, we're losing daily velocity. And the weekly is now coming up down below. I'm going to show you a few things here. Let's go over to this screen right here. And a few notes to you today. The show could turn off at any moment. If you're just joining us, the show can turn off at any moment. I got like band-aids everywhere running the show this morning. So the first thing we need to look at here is we could look at this. We'll look at this like this maybe, just so you can see right here. The stars are kind of aligning here. Where the weekly trigger is now in place, right where the ICT weekly is. And the daily trigger is coming up to meet up with the rest of the daily ICTs here and here. On a 30-minute basis, if you were to look at velocity, well, we've lost a little bit here of daily velocity. On a daily basis, though, here, let's look at this one. On a daily basis, the weekly looks pretty good to hold. So just right here, this weekly looks like it's good support here. And the daily looks pretty good too. It is on a high right now, but it is rolling a little bit. But it does imply that if we do roll at any point, that it should hold. Theoretically, it should hold. Let's go back here to a 30-minute. That's a pretty far way down, right? And that's what all the questions are right now. Like everything that I'm reading right now is when does the squeeze bubble burst? And I'm a little shocked at that because, or why? Like everyone's like the RSI is too high. It's biggest squeeze in history. Like the biggest squeeze in history, it should come down argument is kind of bullshit. when the stock market wasn't valued, like, let's say when the stock market was trading $100, it's only going to go up $1 or $2. Big moves, right? When the stock market's this big, the high price, you're going to expect huge, bigger moves. Big dollar, $3, $4, $5 moves. So I'm not as concerned with the size of the squeeze. And we spent a significant amount of time trading up into. Let's go look at this. Trading up into this 7,000. I mean, in all fairness, the target last year was 6,800, which is what we did, right? We came here, smashed the 6,800, and then we were looking for 700 to 715 to finish out the year. So we spent, in this like attack of 7,000, 700, however you want to look at it. It's been going on since October of last year. Let's call it October. We spent a lot of time here. Big drop to the downside over here, and we're back on it again. So the argument that we shouldn't be here, we can't hold 7,000 or anything like that, it's kind of like obtuse. And not only that, we're coming into inflation where your dollars don't go as far. So even if you made an argument that the market is overpriced, the dollar is getting wrecked. More and one-time hits almost permanently too. When you price in oil inflation, it's something that gets built in permanently. It never goes away. Like, let's say you remove tariffs. You say, we're going to get rid of tariffs. So you can remove that inflation. Like that. You ever hear like one-time hits? If the tariff stays on, it's a one-time hit. Oil is like that permanently, especially on events like what took place in the Strait of Hormuz. The price will be built into the price of oil forever. Not forever, but pretty much. 99% chance going to be forever. So we still have not built that into this market. So the argument that like this is the top permanently or something, I find that hard to believe. Especially when we're constantly fucking printing money. It's like never ending, right? It's just constant forever and ever and ever and ever. The cheapness of money is really what forces a lot of these bigger moves to the upside where we never come back down again because of the dollar devaluation. Now let's go on a 1 minute basis here really quick. We're going to talk about that roll and what it's going to look like. And what we're looking for here is where my no bueno thing is right here. So I've got us going up today to close this week. Up here at 715, 720, 7,200 on SPX. Now, if at any point we lose, right in here, if we lose, see these three white lines right here? We lose 708.40, 708.78, 709.22. I think we should get concerned about next week and some kind of a roll. And there's a lot of talk about that right now. Like all the articles that I'm reading right now is like, when does it roll over? 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 And it should roll over because of this reason, that reason. They're throwing the kitchen sink at it. And to be honest, the street bought SAS, street bought SOX, street bought all of tech for earnings. That's usually a sign when they bought that bottom to get into earnings that they're going to sell into the market on their earnings. So whenever you get these big spikes on tech ERs, you should see that as a reason for or the market selling into us. So as we continue to report tech earnings in the next coming weeks, you should see some kind of a roll take place, and that does still go in the face of seasonality becoming strong as we head into the summer. So my only caveat here is, even with these three little lines, see these three little, we'll call them the three little pigs or something. I don't know. 3 little pigs right here. Even if we lose this here, I should have said 706.57 would be the last one. But if we hit these 4 right here, if we hit these 4 right here, my bigger question is if we can hold on, like if the market can hold on long enough. Just look at this again. Let's go to 1 hour again. If the market can hold on long enough, I would like to see this daily trigger make its way up here, and this weekly trigger next 2 weeks come up here, and all this stuff kind of hold. Even if we make a quick trip downstairs for a quick minute for a V shape to go higher, it seems like we're prepared for that. Seems like with any kind of noise from SOH, FOMC, monthly rebalance, like we have MAME rebalance where I think we have 60 billion for sale or something like that.
Somewhat confirmed. I heard from a senior Iranian source earlier, which
voice. I don't care about no senior Iranian officials anymore. You can't trust any of them. Can't trust the Iranians nor the Americans. So the point that I'm trying to make here is that there's a ton of room here for the market to fall over the next, into like, let's call it the first week of May, based upon events and also end of month flows. And so we have end of month selling flows, like 60 billion for sale. But then you get the new month flows in May to buy whatever that dip is. And the hope here is that we don't go any deeper. If you look back here, that we don't go any deeper than, let's call it like at worst case scenario, 667, worst case scenario. And I don't even think it's going to be there. I think it's going to be higher. I think it's going to be like maybe 680 on the worst. Hold on here. That would be my worst projection here. So what ends up happening is what this ends up looking like is on indexes, you get big spikes on the market or on the street being long on tech earnings, right? Those 3 strokes would be like, I don't know, Microsoft going moon or Apple going moon, or whatever stock you're talking about. But then the S&P 500 just kind of rolls sideways. Gets caught up in FOMC, gets caught up into the month-end flows, and then we're in like a perfect world, we're holding this right here. So your daily trigger holds up just long enough. Your weekly trigger holds up right here, and we're defending this prior fall highs backhand. We're building this as a base now. I don't want to see this go any lower. I don't want to see 667, any of that kind of stuff. Like, I would say like 690 would be a nice number. Like right in here, 690, 693. Plenty of room in here for a drawdown. Let's look at what that looks like too. From the peak, tip to tail from the ATH and the overnight, that's 4% right there. That's fucking good. To 690. Where's 690? I mean, something's wrong here. Where's 690? What's going on here? That's 3.5%. That seems good enough to me. I know what the Bears, what the Bears want, right? The Bears want us to be, right here, right? Equal legs. Another 11 or 12% down. Very rarely that happens. It happens, but it's very rare. The daily velocity, weekly velocity don't agree with that happening either. So Elliott Wave doesn't agree with that happening. ICT has us potentially trading 667, but more than likely trading 690-ish. I think it's at 683 right now, the daily trigger, but it will be more than likely it'll be at 690 by the time we start rolling down. Now we should be able to hold this. If we can tag that up or move that 7200, that's, I think that equals like 715-ish. If we can hit that number and like do that quick peek above, or even just like get told no, trade from the 720 down to 6900, that's 300 points. Seems like worst case scenario. We just did this, remember. We just did this in seasonal weakness, and we're now heading into seasonal strength. So that's what I'm hoping for here. And we can talk some more. I think I talked about it earlier this week, which was the look at all this. Like, this just got moved down here too. Like, this was over here and now it's over there. I don't know what's going on with Trading View. Got some wonkiness Trading View today. That right there. But being a Friday, it does make me wonder if we start cleaning, like start unlocking this stuff down here. Let's go over here. We want to check the buyers at 10 and at 12. Do we come down here, unlock all this stuff, and then start the process of like unlocking this, and then start the process of unlocking that other white line down below? And then what it does is it opens the door. That's this one right here. It's 706.57. What it does is it begins to put a top in. Yeah, you want to trade all this next week for your... Hold on here. Clean all this stuff out, and then they're down here, and they're trying to swipe this one at the end of the day. And then they don't care. The top is now in the overnight hours of Thursday to Friday, and then they don't care. There's enough room for the market to squeeze on a good tech earnings day. We can still squeeze higher, but then still be in that process of rolling the indexes into end of month in the first week of May. Let's just be aware of it as we go forward. We can watch these numbers today. I do expect us to go down here this morning into 10 a.m. Let's watch this closely. Let me go over to the main screen here. Let's see if these guys come in here and buy all this stuff up. They're without a doubt trying to. You can see it's kind of being manufactured right now for a roll in the next 2 weeks, over the course of the next 2 weeks. Just be aware that the market is attempting to roll over. Let's watch this closely here. This one right here, so we can see it. Let's watch these 10 a.m. flows. And I've got like, I went last night and did charts on all indexes, and I've got conflicting index expectations too. I've got really negative IWM projections, and then I've got positive SPY projections. So there's uncertainty in the market where we are right now. Let's watch this closely here. That over. And gap, or still a little bit more gap down here to put in. Coming into a major call wall right now. 71.30. Where are we at right now? We're underneath the call wall right now. Just be a note that we're underneath the call wall right now. Net gamma 7130 is support, and we're at 7118 right now. Yeah, we got 7150 as 7150 is call wall on 0 dates, and then 7130 on net. We are setting up for a big roll here. On net, if you have the Gamma Viz on the website, it's a nice bounce right there. I like it. So they did take out one of these right now. They're unlocking these doors for the future here. It's a nice place to buy a dip, by the way. This is the only support left for bulls right now. This is it. This is the place right here. And we should start talking about the market not being hedged enough. So if we can look at this really quick. I'm going to switch over to some gamma here. This is because the chat boxes aren't working either. Huh? Hold on a second here, guys. I got to switch into these things here. Yeah, that's fine. Hang tighter, guys. So weird. Sorry about that. I'm trying to figure out here what's going on in the background. Okay, so I do want you to know that this right here is 7130, and currently we're at 7123. So we're underneath right now. Hold on, that's wrong too. We're trading down underneath right now, this one. And what I want you to pay closer attention to is that are two key points, which is one, the gamma flip is at 7110, which is exactly where we are at the moment. We're on the gamma flip. And then I want you to also watch this 7090, but then note that there's not a lot of hedging in here. There is, but not a ton. In max pain right now, 7030. The 7000 is support. The put wall is 7025. And then the first support is 7090. Bring that back up again. So this is it, right? We lose this here. It gets nasty. No bueno to the downside. So this is kind of it. If you're a bull, this is it. Last place to buy a dip. This is it. Last place right here. Right where we are. Last place to buy a dip. Right in here. We've got a mark right here. And we'll see if this is the bottom. Get this nice little, we need to get above this one right here. And then we can start getting long here. Let's draw this in together. This is our prior right here. There's a little bit more down. I'd like to see that one get. Hold on here. I'd like to see that one get taken out right there. And then that one get beat. Just like this. Now, if this gets beat right here, we can take a long right here. And that would be the prior high right there. Close that out. This will be your 1 minute coming up to grab price. My other issue is with this one right here. If we don't get this new high right here, if we fail this new high right here, we're going to go down here and party at 12 p.m. down here at 7:06. We can take that trade too if we fail to get that new high. $7120. So this is the gamma flip, I believe. I believe the gamma flip's right here. Let me check SPY really quick and see where it is. $708. Gamma flip. It's not a question mark anymore. I'll mark that as a bottom. Looks like buyers stepping in. We want to see this high here get beat so we can start taking longs. No longs yet. You can start a position here if you want to. This is it for you. We start trading down here and like closing all this stuff out, it's going to get messy. Want to start becoming a seller. This is where buyers should be, right in here somewhere. Last place for buyers. Give me just a second. I gotta look at a few things in the background. And there are a fuck ton of puts out there, just as any put gamma. I mean, all the puts are sitting on 710, right where we are. Like, we're loaded with, like, puts by strike. Let's go look at that really quick, too. Puts by strike over here. You can just see these. The majority of them start at 710, so the market should hold here. We can print these next week, but or maybe end of day. We could dive and start printing this stuff end of day, but you're probably going to be hearing a lot of hand wringing. I think earlier in the week I posted on Twitter on Sunday, and I said I posted a tweet of a bear saying, "Look at the chart." It's like hand wringing. Like there's gonna be a lot of hand wringing this week. There's a lot of hand wringing here. This whole entire week is hand wringing, right? It's like sideways. It should roll. I'm going to run the story as to why it should roll. And if you just look at the puts versus call volume, this is the reason. They want, like, all the, any put holder or call seller doesn't want, but they start printing if we get underneath and start opening up all this shit here. This should get bought. So we don't print all those fucking puts. Or at least until they're going to go to die. They will go to die today. Like they'll go to die to, like, so there's a window for those puts to print, but it's like end of day or over the weekend. There'll be more opportunity on Friday of next week for them to print even harder as they start to roll off, or there's no reason to delta hedge them anymore. We're just still not there yet, though. Too many puts, I guess you could say. Just want to get above this one right here. Just watch this. Just going to break over this 1 minute trigger here. Excuse me, the 5 minute trigger. And pay very close attention to it. If we fail to get that new high, we'll look towards 7:06 into 12 p.m., 1:30. Okay, so I'm going to read some headlines to you. I'm not going to go too deep into them, but I'm going to just read some headlines for you the past couple days here. And I'm going to start, there's a ton of shit. There's a ton of headlines here. And there's some specific ones I want to read to you guys here. I'm just get through them here. My feed is all full too of like my YouTube feed. Oh my god, it's all full of like fucked up information. There's like, it's like a mix of AI and a mix of hey, hold on a second here. Who are you? Yeah, I have a spider. I like spiders. I try not to kill them. I let them live until they get too big. They eat other bugs. They're like one of my favorite bugs out there. People hate spiders. I love them. You can live, bro. Go do your thing. Go crawl underneath that. Yeah, there you go. Crawl underneath there. It's nice and dark in there. You can eat a bunch of bugs. He just like came down from the ceiling. He's maybe like 2 millimeters. At any rate, my YouTube feed right now is full. Like it started earlier this week with like the bro fair sphere. And now it's just everywhere. Market should roll over. The difference between spot and like more like physical and spot, and we're all doomed, right? And it's not that clear. You know what it reminds me of, or something similar to it, is the argument right now that the U.S. has expended all of its munitions. That would be a high level, like, that wouldn't be public. If the U.S. expended all of its ammunition, you wouldn't know. It wouldn't be in the news. You know that meme, like, that's bait? That's what "we don't have munitions" reminds me of. Now, oil is kind of similar. And I saw an article last night that said, well, China has huge reserves. They were stockpiling last year. That was known last year. I knew about that 2 or 3 weeks ago. They're running that news right now like it's some kind of surprise. It's just old news. That was going on. There was news about that all last year, that China was loading up their oil reserves. And the thought process was that it was to fight Taiwan, why they were amassing oil. And there was more information about that too. I'll try to bring up some of those articles if I can today. But the greater point is that, like munitions, we don't know all the oil that's out there. We don't know all of you have the U.S. saying no freighters are getting through, no large carriers are getting through, nobody's getting through the strait. And then you find out from other sources, civilian intelligence sources in shipping saying, oh no, dude, like 20, 30 ships a day are getting through right now. So you have this like, I don't think I've ever seen it this bad. Maybe during Vietnam will be the last time I wasn't alive then, of course, but when I was in high school. My electives were all in political science and related to political science. And then when I went to college, I thought I wanted to be a political science major. I went and took business instead, but my mom was like, you got to make money in life. You can't be poor. Can't be a poor artist. Can't be a poor teacher, any of that kind of stuff. But I do have a background in politics from my youth. And my father also served in Vietnam. He's at one time he was kind of semi-famous. He was the chairman of the first parade for Vietnam veterans in the United States. And they did a documentary on it. PBS did. And my dad was the center of that documentary. I actually went to the wall when it was opened, the ceremony to open the wall. I was there with my dad. I was a young kid, and I went with him alone to that. It was raining that weekend. It was really sad. It even affected me as a young child. I could see the pain in a bunch of men and women's faces and how they were treating each other and all that kind of stuff. But because of that, I delved into the history of Vietnam and the history of proxy wars and the domino effect, which has been disproven at this point, or argued to be disproven at this point. But the reason I'm saying this to you is because the dis or misinformation is because in Vietnam, major broadcasters started something called the 6 o'clock follies that led to a shift in opinion on the Vietnam War. And the reason that the 6 o'clock follies were started was to get information out to United States citizens. It was a very low information time. And I haven't seen anything like it. Now, of course, I was born later, but I haven't seen anything like this, like we're seeing today, in terms of quality of information from everywhere. And I think the same thing applies to how much oil is out there, and also its impact on the United States in particular. the U.S. in the 90s and early 2000s went on an oil rush. Any of you out there that's watched this show, if you live in Texas or if you live in the West, not the West Coast, but the West, all the way up into Montana, you are already hyper aware of what took place in the U.S. at that time period. It was like a mad rush. Small towns that had no money all of a sudden had wildcats everywhere, with money to burn, right? And the U.S., I was watching one program yesterday on YouTube. My feed was full of this shit, and so I watched one yesterday. I didn't even want to watch it. And I watched one, and it was like they didn't discuss at all that 1973 and today is not the same in any way, shape, or form. There was another point that one of these YouTube shows made was that that the U.S. is a net exporter of oil, and we are a very small net exporter of oil. We are because we make money off of the export, but we could keep it, is my point. We don't need to export it. We get better deals. Some countries are overproducers, and they sell it. Or even if they are considered net importers, it's by choice, not by they have to be an importer of oil. So there's just a ton of like misinformation on or stale information, or I don't know if it's just the research that's being done is from AI. I don't know what it's from, but we're not in 1973. It's not worse than 1973, and even if it is, or it grows into that, you're likely not going to see that priced in until something really bad happens, which has not happened yet, or we'll price it in the fall. And it's not that long from now. You got to remember that we normally get into the summer doldrums in mid-June, July. So if we're looking for dips to buy, you're looking to buy a dip today. If you're looking for a dip to buy in the daily and weekly trigger, as of right now, I expect them to hold. I expect them to hold us to have a good summer. And I think right now we're moving up to 6,900, 690. Somewhere in there is like a nice bottom, and that's I think I showed you earlier. That's somewhere between 3 and 4.5% from tip to tail, which is a good correction, even if we were going to get a correction and not another major correction like we just had. So can we correct a major correction in the fall? Sure, easily, but talk about start thinking about the idea that I think these guys have it wrong. And it's weird too, like a lot of the oil traders I think have it wrong. Then they're all angry too. They're all like, the US and Japan are probably shorting oil. I don't know if I agree to that right now. Maybe if the US is actively shorting oil behind the scenes, then that could account for the spikes that we're getting. You can see oil spikes and then immediately comes right back down again. That could be an effect of that, but I don't know that I see it as theoretically being something that's the end of the U.S. We're not as dependent upon world oil, and I do agree that the rest of the world can fall into this like bigger recession, and the U.S. can fall into that, but that again brings up time. So you got to look at this as like a doomer is like, I want it right now. It's the end of everything. The world's going to end, and it's going to zero, right? And in reality, it's probably something that's long and drawn out. And the stock market's looking past it in the same way. It's like, hey, we got a lot of time here. Like, we can price some of this shit in the fall. You can allow some of these countries that are not U.S., that somewhere in the Southeast Asia, Australia, maybe even Europe to an extent, can fall into a recession. And then the U.S. would join in. But that would be like, winter. Going into seasonal weakness. So you got like fall seasonal weakness, you got spring seasonal weakness, and this is something that could potentially play out over a much larger time frame than we should crash today. Negotiations broke down. start crashing, let's go to zero. And it's more than likely a little bit farther down the road. And even then, let's say you price all that stuff in the fall and the winter, or the January to March of next year. We have recessions going on all around the world, and even if we do roll down that deep, Uncle Sam's going to step in. And that's the thing that no one ever wants to address: is where's the Fed put? And the Fed put is always there in the background. So let's say you have a major correction in the fall, or you have a major correction in the springtime. You're still going to get the Fed stepping in. If you ever get caught in anything like that too, unless we're underneath that monthly trigger, we're going to bounce. We're going to go up, and keep going up. So I don't think we're in that place right now. But I want to read some of these headlines to you. We're going to start back here on Wednesday. I'm just going to read you a few things here. Oh, God, that feels good. Nice and ice. I need ice. That feels really good. Is this the next here? Here, risk assets are leaning too hard on Trump's peace push. Just made a new all-time high. This is from Wednesday. And we just made a new all-time high as it said that. Tactical risk reward not compelling here. Goldman's hedge fund honcho lays out the bull bear case. I think I read that to you on Wednesday. And I do agree to some extent. There's probably only one more high left here. Trading 7-1. Trading one. I just traded it, or near it. We traded 7-1-4-5. Let me just show you this really quick. So this is, if you guys don't remember this is from Monday. This is your weekly gamma chart. What we're looking for is a pop up here to sell. We still haven't hit it yet. We're fucking close, but I want to see this. I want to see this pop up here to sell, to go down. And even if we sell this, worst case scenario, close the gap down here, buy the fucking dip down here. Nice little dip to come into. And this is more than likely, I've got this tagged here, but this should be, hold on a second here. This should be the Friday of the first week of May, which is not the first. It's probably the 8th. Somewhere in here. I could have drew this better. Something more like this. And I think I said to you as well, it wouldn't be that crazy. It'd be more like that, in line. The other thing, too, in here is this should hold. So anything down here is just a freebie. If you can, and this daily trigger is racing up right now. That weekly trigger will be right here. So this should be the dip buy, and worst case scenario, close the dip, whip them, and then we're out of here. Let me just show you that weekly trigger too. You can see that weekly trigger is coming straight up right now. Coming in to save the day. This is in the first week of May 8th, let's call it. And then you've got the daily trigger racing up as well. Come up, blast through the daily trigger's on the way down right now, but the weekly trigger's on the way up. So maybe we drag down there a little bit, right? Break that daily trigger, and then we're up and out of here and away. Let's look at this really closely here. Let's see what happens here. We did get the new high on this one right here. This is good. Now we're just looking for this next one right here to beat, which is, can you guys see it? Oh, you guys can't see this. Hold on. So this is the last one right here. We want to see if we can get this one beat right now. I'm throwing bombs in here to sell on the weekend, huh? This next one says, we're in the final innings of systematic support for stocks. The easy part is behind us. These guys don't want to be buying highs in the first week of May. You know, they want this thing to roll over so they can find a dip. I think you do too. I do too. You want to see a trade down to the daily trigger. Stocks keep rallying. Everything else disagrees. I feel like we're the only contras out there right now. I think that's the bigger failing. From everything that's out in public, like we should be crashing right now. Should be crashing the last few weeks. Yesterday's news, where we dropped yesterday, did feel like it did feel like the Pakistan news on the inverse. Like, hey, Pakistan's getting involved. We should squeeze here, bottom. Yesterday's news, when we dropped yesterday, felt like the inverse of that. But, of course, we didn't drop. It looks more like a normal earnings season. It just looks normal. It looks like we're parked sideways. We'll absorb any squeezing higher, get sucked back in, and then eventually we cough it up once we get through big tech earnings. It just looks like a standard earnings season. And of course, we've got this huge backdrop with geopolitics clouding the whole entire thing. Let's see what else I got here. From forced buying to air pockets lower. Another headline. Flows pushed up. Fading flows will decide it. They just want to see the world burn, bro. That's all the bears want. Here's something that's important. We've discussed this, I think, a couple times, but we do want to be hyper aware of it. It's mechanical. Goldman warns of massive month-end rebalance from stocks to bonds. Heading into month-end, Goldman Sachs trading desk models estimates $23 billion of U.S. equities to sell from U.S. pensions given the moves in equities and bonds. They estimate the equivalent amount of bonds to be bought. During the first week of April, the rebalance estimate was insignificant with only 2 to 3 billion to sell. However, post the rally on the 8th, where the S&P closed up 2.5%, the estimate jumped to 10 billion U.S. equities to sell. Since then, we have seen the estimate climb higher as the market continued to close in on the green, eventually settling in around 23. I've heard reports of 30 elsewhere. So right now it's saying 23 billion, Billy. I assume if we get up to 720, it'll be 30, Bill. We also witnessed a trigger event on the 10th of April with pension, in which pension were estimated to sell 21 billion of equities. This number is not included in the month-end estimates. How does this April rebalance stack up versus history? 23 billion to sell ranks in the 83rd percentile amongst all buy and sell estimates in absolute dollar value over the past 3 years, and 92th percentile going back to January of 2000. 23 billion to sell ranks in the 11th percentile amongst all estimates on a net basis over the past 3 years, and in the 4th percentile going back to January of 2000. Monthly portfolio performance. U.S. equity has outperformed fixed income by 8.16%. Month-to-date S&P total return is 8.95%. 10-year total return 0.79%. And with CTA demand waning, demand from this cohort sits in the 8th inning after acting as a major tailwind the last couple weeks. And that's a lot of rotational energy for the equity tape to handle in these fragile highs, especially with oil resurgent. So more arguments that the market should roll into the end of the month and the first week of the month. Note that the first week of May, the 1st is a Friday, and then the 5th through the 8th is probably the real true first week. So you want to look for this Friday's catalyst, like today. You want to look at today as an unclench moment. You want to look at FOMC as an unclench moment, month end as an unclench moment for all of this shit to get sold. And also you'll have CTAs on top of the pension rebalancing. If we can scream up and slam into that 720. The semi-squeeze is going parabolic and getting dangerous. Here, I'll bring up socks. I mean, it's kind of ridiculous. Socks is kind of ridiculous. And this is probably where a lot of the angst comes from. This is socks. That's a little vertical. Looks like a bubble to me. Whoo. I mean, if you look at it from back over here, oh, hold on here. That's huge, right? And if you look back at it over here, I mean, shit, we can't even just do this one right here. This one's down here. So what they're looking for here is to take profit on these tech companies, right? Let me just look at this thing here. Fucking beautiful. rotation into other things maybe. So even if you see this come down here, and I think that's where I'm getting a lot of this. I'm getting like warnings on NASDAQ and I'm getting warnings on NASDAQ and small caps due to this tech here, but I'm not getting warnings on SPY. I'm not getting warnings on DIA. So even if this stuff rolls and there's a rotation trade in here, maybe you see a little bit more damage in Qs and in IWM, RTY, NQ, but maybe S&P 500 a little bit more resilient. So you see this come down here to clean all this up, and yet SPOOS only goes down, let's say, to like 690, 680, somewhere in there, 685. So not as bad as you would think if there's a rotation more than, oh my God, this is too high, and you end up seeing a rotation that takes place rather than abject selling. Let's watch this closer again. Sucks. There's another headline here. SaaS apocalypse, not now. Goldman takes on the software bears. I'll read this to you briefly. Just the top lines on it. So 2 weeks ago, software stocks hit a more than 2-year low as a result of AI disruption fears over secretive LLMs that were so powerful at hacking any system it took a bunch of kids with a Discord server just a few hours to access it. And it had become more hated than Congress. That was the bottom. Since then, we have seen a powerful bounce in the software space along with everyone else, which has squeezed higher for 8 straight days of gains, one of the longest such streaks in history. Many on the street, such as JPM trader Brian Heavy, aren't buying it. In his market note yesterday, Heavy wrote that the move seemed largely tactical given almost nobody really owns the software sector, but seems folks don't want to be caught short-handed ahead of now earnings. Seems we are moving to SaaS is dead, to maybe they can coexist. Brian added that we are starting to see LO demand come back to the sector, but it's still very spotty and minimal. Unfortunately, the downbeat guide from ServiceNow, which sent the stock tumbling again, and the software sector lower, will likely lead to another reassessment that the worst is now in the price and promptly snuff any green shoots in the sector. Yet more robust assessments are starting to emerge from some of the most respected Wall Street firms seeking to dispel fears that AI will obliterate software as we know it, even though news that heavily indebted Thoma Bravo portfolio software company Medallia was now worthless, will not help their cause. On this topic of SaaS, you're likely going to see the mantra that SaaS is not dead and that the software is not dead until these companies start imploding. The internet bubble in 2000 was very much like this. Everything was fine and hunky-dory. You had mergers, IPOs, money everywhere. Was it pets.com? I think it was pets.com was like sold for billions of dollars, and it wound up going bankrupt like a year later or something. I'll have to look it up, but a lot of that happened in that internet bubble, where everything was pumped up, and then the shocking thing about the end of the internet bubble is that everything came up at the end. You had like the final company's IPO, and we haven't had OpenAI IPO yet. And in concert, all internet and tech stocks like super ramped up to these crazy highs, all together in unison. And then that was the top finally. So it wasn't like, so if you compare SaaS to the internet bubble, where you want it to be dead or it's going to be dead, it probably won't be dead until the bubble is top is in. You'll see these companies all start to implode together. Once we're done with this AI build out and roll out. U.S. business confidence soared in April amid panic emergency, buying ahead of price spike. There's still too much complacency in stocks. Top Goldman trader warns CTA demand is waning. I read that to you, I think, on Wednesday, or I think I read that to you on Wednesday. We'll take a look at one of these charts really quick. I think I showed this to you. This is your CTA. This is a CTA chart right here. Can I make this any smaller? You see this here? Yeah, it's close enough. But there's still room here. These CTAs can still be buyers to get us up into that 720. And you're likely still seeing a mix of dealers supporting the market and a mix of CTAs supporting the market still. We're close, but we're still not quite there where CTAs are no longer supportive. So we'll look for them to become sellers where they won't be buying these dips, but it's not today. It's more than likely going to be. Look at that beautiful fucking thing right there. It's goddamn gorgeous, isn't it? Look at that sexy shit right there. Go up there and slap the fuck out of that prior high right there. Slap that fucking thing up there. Slap that fucker. Go up there and hit it. We'll see if we can roll down into it's kind of a shitty look right here, but into 12 o'clock and see if we can get some more buy action up here. Let's watch these two. There's a prior high here and a prior high here that needs closed up. So, yes, CTAs are long in the tooth. They're ready to sell, but they still have room to buy. Not much more, but they do still have more to buy. We also have this one here, institutions. This was from yesterday at 3:30 in the afternoon. I'll read this full one to you. The institutions just bought the most NASDAQ futures ever. What a difference a month makes in mid-March, just as stocks were tumbling on the realization that the Iran war is here to stay. We reported that asset managers CFTC category, which includes virtually all institutional investors, and not to be confused with speculators, which the CFTC defines as leveraged funds, sold a record 36.2 billion of S&P 500 futures. Fast forward a month, when the latest mid-April commitment of traders report revealed that asset managers bought a record amount of NASDAQ futures. According to Goldman analysis, they bought 9.7 billion during April 7th through the 14th week, the largest notional amount for at least the past 10 years, according to Goldman. So I want you to think about that. The street bought a fuck ton in April 7th through the 14th. They longed the market. So they're long right now. CTAs are long right now. Dealers, I just showed you the put call ratio. They don't want to fucking see that shit print until it's near dead, those puts. Or completely get up there. Squeeze that shit up there right now. Even when you draw it out for them, they don't go long. They get up there and hit it. Hit that fucking thing. Slap that shit sideways. the largest notional amount for at least the past 10 years, according to Goldman. The weekly flow represents new longs as well as a furious short covering. This is somewhat offset by flows elsewhere. Other and non-reportable added 1.8 billion. Hedge funds sold 5.6 billion, mostly due to new shorts. Nevertheless, non-dealer net length recovered from severely depressed levels. NASDAQ non-dealer net length on April 7th prior to the aforementioned buying ranked at 11% on a 2-year basis, following weeks of persistent selling. It's only gotten more euphoric since, according to Goldman. Since the COT report, more leverage demand potentially manifested from April 14th to the 21st. Today is the 24th. So you have rampant buying into Friday's close of last week. And what have we done all week long? We've gone sideways, right? Normally we get a print to the upside by latest Thursday. Now we're into Friday. So maybe we can hit this high on Friday, or we can hit it on Monday open, slam into that 7,200. If I was to give like an exact tick, it's probably not 720. It's probably going to, I think it's 7180. I'll look right now. But it brings up this larger question. Like, who's selling? Like when we get into like the pension selling and we get into CTA selling, how brutal is it? Is it the crash that everyone's looking for? Possibly, but more than likely not. If we hit 720 and come back down to 690, that holds. I don't see how the street could be for sale. They were buying into Friday, like the street was, unless we leave them as the bag holder potentially. But retail's not the bag holder here, so this is mostly, I think they're still long is my point here, is that they're going to remain long into those summer months. Look for that big summer print to the upside, printing out 730, 740, and then come back for 760, 780 in the end of the year. It's only gotten more euphoric since, according to Goldman. Since the COT report, more leveraged demand potentially manifested from April 14th to the 21st. NASDAQ 3-month funding versus Fed funds richened in outright terms. Meanwhile, given the coincident price strength, asset managers likely remained engaged. On April 14th, the rolling 6-month correlation between asset manager longs and price returned to 0.4. Over the next 5 sessions, NASDAQ price and aggregate opened interest rose plus 2.5 and plus 4 billion respectively. That said, the option market also displayed an improving sentiment. NASDAQ 3-month normalized 25 delta put call skew cheapened meaningfully. Whatever the case, institutions are now aggressively piling into tech once again, positioning for strong earnings results from tech heavyweights, which usually means a rug pull is imminent. So you saw the socks that I showed you earlier. You have this like relentless chase and buy. All these guys are looking for these big prints to exit. So I'm buying the underlying equity and I'm looking for a big print into their report. And then I'm selling out into that. And what's the drawdown from there? And if we're smashing up here in this 7,200, 300 points down on SPX seems like a reasonable correction. It's 3 to 4%, which is an average correction. So we'd be looking for that in mid-May to continue even higher into summertime. Goldman tech trader responds to clients stunned by record semiconductor move. They were stunned when the bottom was bought too. They're always stunned at bottoms and tops. I got another one here. This is from Thursday. So I said this to you on Wednesday. This is an article from Thursday. I was asked about gold on Wednesday, and I said the trade is sideways, and then it catches up, and then it's sideways, and then it catches up. Here's another headline. Gold is going nowhere. That's still the trade. Gold direction doesn't pay. Theta pays. 100% agree with that statement. What else do we have here? Mercuria, Goldman, JPM see major aluminum market shock. We are already in a black swan event no one could have foreseen. That's aluminum. I'll read this to you. Oof. Last week, JPM analysts warned that the aluminum market is descending into a black hole, or a metaphorical point of no return where the global aluminum market will face a serious, prolonged supply shortage. From Mercuria to JPM to Goldman, traders and analysts are at these mega institutions are all warning of a metal supply shock with major risks that could curtail the production of anything from planes to tanks to cars and even power infrastructure. I'll read this next one to you here. This is from yesterday at 7 p.m. The market roller coaster of the past 5 days continued on Thursday, with stocks once again trying and failing to break out above last Friday's all-time high. And what has now become a 100-point ping-pong game as stocks sell off just below 7,200, only to get dip buyers jump in about 100 points lower. That's the CTAs and the dealers that don't want to see all those fucking prints print just yet. And of course the street is buying them as well. And while stocks had largely started to ignore the news flow from Iran in recent days, yesterday, on Thursday, a barrage of Iran-related headlines between 1 and 2 p.m. was all that mattered, sending the S&P futures tumbling as much as 100 points lower before recovering almost all losses, as it turned out that the near war, according to X, was fake news. We annotate all the main moves below, noting that if one wanted to create fake market volatility, this is how one would do it. If one wanted to create fake market volatility, this is how you would do it. At 12:57 p.m., Israel on high alert ahead of possible renewed war this weekend. 1:03 p.m., Galabaf has resigned as parliament speaker under IRGC pressure. 1:35, reports of air defense activation in Tehran. 1:48 p.m., Israel denies it launched any attack in Iran. 2:02 p.m., Pakistan sources say U.S.-Iran talks are continuing. 2:05 p.m., Iran media says air defense in Tehran was a test. 2:10 p.m., Iran reports deny Galabaf has resigned. And I'm going to show you a neat little thing. This is kind of the thing that sucks here. I fucking hate trading the news. I hate it. And this is so reminiscent of COVID. I've got a chart here that actually shows the headlines. Rumor of artillery explosions in Iran. Rumor rejected it was a drill. Then we got over here on Wednesday with all of the reports I just read to you, and then the recovery when all of those reports become bullshit. Excuse me. But it's fascinating to see. It's fascinating to see, like, it's not the same as COVID. Like, I think Trump's gotten better at playing the markets than he was in the first term. What really happened during the first term was he would do a presser at the end of the day, and then he would do a presser in the morning before market open, and you'd see like the market fucking crater at like 4:15 in the afternoon. You put a trade on a weekly. At that time period, you could put a weekly on, believe it or not, or an overnight trade. Overnight trades were easy back then. But you'd see the market go crazy overnight. And then Trump would come out at like 9 a.m. and fix the market. Or if the market wasn't a low at a close, he'd long it, and then he'd come out at 4 and he would pump the market up like crazy. People would pick stocks like, what's he going to talk about today? Which, as a matter of fact, at that time period, I was spending a lot of time on stocktwits.com because all the pump and dumpers were in there trading the biotech stocks for COVID. And it was fucking wild. Now though, he doesn't do the presser. He does the pressers now, but he doesn't do like the market shattering pressers like he did in COVID. Twice a day, he'd do them every fucking day. It was insano. But now you're seeing this same thing in just a different form of it. Whenever we're coming into major resistance, you'll see like fake news dump the market, and then you'll see that it recovers thereafter. It was none of it was true. And the same thing, the same kind of shit went on during COVID as well. But at that time period, it was Trump. Now Trump's a little more savvy. He sees where the market, or I think that people that work for him or in the executive are like, hey, boss, you got to say something here. Or, hey, boss, this is the time to say something here. That you have a chance to get real nasty right now. You have a chance to get dovish right now on the market and on the war. And so you see a little bit more preciseness with how Trump does it these days, unlike during COVID. And also now you see other market traders getting involved in it when we're in inflection points. And I thought that yesterday, when that news dropped yesterday, that Galaba, whatever his name is, was dumped. I did see that headline yesterday that Galaboff was dumped, and I was like, man, that sounds a lot like the that headline sounds a lot like the Pakistan headline on the inverse. And of course, it was proved to be, or was disproven yesterday. So right now, it's hard to trust any news coming out from the executive or from Iran, from both sources. And I'm actually kind of surprised that the news squawker keeps harping on, like Iran said this and Iran said that, because you don't know exactly.
You reach a critical minerals deal to weaken China's grip.
Yeah, get on up there. Can we take out this one more up here? Can we slap that one right there, maybe? It looks like that way we can take that one out.
US Trade Representative Greer on this says that the US and the EU will explore how trade measures, such as broader adjusted price floors, could strengthen domestic industries.
Now, there is some interesting information here in those fake reports yesterday. So when we are making those lows, when you see the markets like dump, right? We saw another dump earlier in the week. Whenever you see those dumps coming into the next 2 weeks, let's say I think yesterday the low was 702, very close to 690, right? There was a rotation trade that took place. And I think I was mentioned that earlier too with stocks, where I showed you stocks going up and saying when people look at stocks, they're going to think the S&P is going to go down. You might get more violence, let's say, in semis or in SaaS or in tech in general, but there's a rotation trade taking place underneath the surface of the market, and the composition yesterday in the dip buying was not in those stocks. There was still dip buying in tech, but there was a rotation out of tech as well into other sectors, including utilities, industrials, and staples. So if you see another low, from this point forward and you're looking for safety, note that utilities, industrials, and staples are beginning to be rotated into looking for that, whatever that dip is going to be in early May, even if we get it. So again, they're still in tech, but they're rotating into utilities, industrials, and staples. Sure enough, Goldman notes that the squeezy price action is now subsiding after yesterday's strength, with speculative pockets reverting lower. Memes are reverting lower. Liquid most short index is down. Surprisingly, HF VIP versus VIP short, with the long leg underperforming the short favorites. Elsewhere in macro data, we got the latest U.S. PMI data, which saw manufacturing surge to a 47-month high. Even services rose. I told you before about industrial manufacturing plants being built out, and also machinery for those manufacturing plants being built out. And I've talked to you about the de-dollarization going on in the world, and that you should be looking towards the U.S. turning back into a manufacturing center in the world, as they once held back in, up until, let's say, the 80s. And while it may appear that the implication here is that the dollar can be valued and the stock market can be valued, we can be switching. Like, everyone looks at the dollar devaluation as we're fucked, and I don't think so. I think we're heading towards a changing economy where the U.S. relies less and less and less upon the rest of the world. The market can go up in that scenario, not down. And while it may appear that the market's face-ripping rally will never end, World War III or not, we may see some weakness in the near future, as Goldman models month-end pension rebalancing, we'll harp that again, of $25 billion of U.S. equities to sell. There's some contradictory information here. I've had three different prices now. I've had $30 billion, $23 billion, and now $25 billion. The largest non-quarterly sell estimate on record. I'm going to read that to you again. The largest non-quarterly sell estimate on record. For context, November and April 2020, November and April, write this down so you can check on a chart. November and April 2020 was $20 billion for sale. We're at somewhere between 20 and 30 billion for sale. As for CTAs, which were instrumental in pushing stocks this high, demand is dwindling, with Goldman models projecting 680 million to buy in the U.S. in a flat tape, after net buying 30.2 billion over the last week and 42 billion over the last month. And now we go back to watching the ceasefire in Iran, which is now transformed into an all too real war on X between Trump and Iran's leadership. Keep popping. Keep going up. Hang tight here, guys.
Furthermore, from Netanyahu, saying we have begun a process towards achieving a historic peace between Israel and Lebanon. Netanyahu says Hezbollah attacked us yesterday and we will attack them today.
I'm looking at April right now. And what did we dump here? On March 27th, we went down 7%. Let's go look at this together. Oh, my ears are popping. Let's go look at this really quick. This was the squeeze from the lows of March. And we had 20 billion for sale. We had 20 billion for sale in March, but we had gone up 20%. We had 20 billion for sale here, went down 7%, but that was on a 20% rise from that bottom, giving back almost a third of the bottom trade. Now in November, we were down 3.5%. And this push here higher wasn't 20. %, so relative to the bottom here for the month of November, we wound up only losing percentage-wise about a third. It's about a third, right? And if you're looking at the charts that I showed you this morning, it should be roughly where that weekly trigger is. So the worst case scenario we should expect, if history is any kind of a like, I don't know, historical reference point, I don't see this like sell that's coming next week and into the 8th, let's call it. Next week in the 8th, I don't think we go down more than weekly trigger, which should be roughly at 90. Let me just take a look at that real quick again, just to make sure. Like, these are all racing up right now as we speak. And we got the daily trigger here trading up to 685 right now. This should be up around this 690 by the time we roll down into this zone down here. So like 690 should be fine. And the weekly at the worst case scenario, if it does get messy, 667. But this will be higher as well. This should be up around 680-ish, 675 by the time we get there. Let's see if we can look at this here different way. The thesis being that this daily trigger is going to race higher. This weekly will race higher as well. And whatever that drop in here is, that's half the trade right here. A third of the trade is somewhere in here, right where this daily is right now. This daily should be here. This weekly should be up here. So I do expect it to hold. I'm not looking for the end of the world trade. And let's be honest. When we're down there, we already know how to buy a dip and how to let it slip by us, right? We already know that if the market, or when the market rolls, it's not like we're going to be standing there going, oh yeah, dude, I was long into that roll and I tried to buy that dip and I got destroyed. There'll be none of that. You guys all have rules around here, right? We all know what a dip buy looks like. We know what to do if it turns higher, right? We start getting long yet again for the summer trade. Situation normal. If the market begins to melt down, yeah, get up there. Keep smashing up there. Take note here that you want to pay attention if we'll likely reject this right here, but I want to see if we get above that yellow line right there. Hopefully you're all making money right now. You all bought the dip down here. You're all making bank. You want to get out before that yellow line. Just a heads up to you. Matter of fact, some of you bulls, if you're already long from the bottom, you want to get the fuck out. Let the FOMOers take us up there. There'll be sellers up here. Get out as we come up into this. Yeah, I don't think, maybe we could potentially hit that. R1 is at 713.11. See if we can squeeze this up here. We might be able to hit this one right here.
So Iran's member of the National Security Committee, Kedrian,
Sucks is there's a bunch of sellers here and here, so like it could be like fucked up, get up there, fail that bullshit.
To occupied territories and enemy bases. Seeing Nvidia shares,
We probably need flows to get by all this.
as Intel boosts the AI market.
We're gonna need just get out, because we're gonna need the 12 p.m. flows to send us over this. I think we could potentially get up to this gap, but I'm more interested in seeing if we can break above it. But if we go up here, if we're dragging ass, then slam that fucking thing, dragging ass, and then we got to wait for the 12 p.m. flows to get through some of this stuff up here. There's gonna be a lot of traffic up in here. All-time highs trading near it again. Traded 711.76. All-time high 713.38. Heading there right now. Could you? She's gone. Kind of sad. There's another headline here. JPM finds, quote, something is off with global oil math. JPM commodity strategist Natasha Kaneva has been on a roll. First, she laid out how long the world has until Gulf oil production shut-ins lead to a long-term collapse in oil production. Then she showed how, as a result of different tanker propagation rates, that the oil shockwave would reach different parts of the world at different times. Then she explained that unless things miraculously go back to pre-war normal, the world was facing a brutal period of demand destruction, but not before global crude inventories hit their oil operational minimum. This was followed by her shock response of a market that just keeps going up and where, quote, oil prices are falling, but nothing has improved, end quote. Finally, Kaneva calculated how long Iran has until the reverse Hormuz blockade, which we advocated at the beginning of March, leads to a catastrophic shut-in inside Iran, potentially crippling the country's energy-producing infrastructure for years. And that is why Trump is saying to you, have as much time as you want. When you should think of when people say these things, why are they saying them? Not just the impact of what their words mean, but why. There has to be a reason why they're saying these things. Kind of like the U.S. saying we ran out of ammunition, and you and I know that. The U.S. saying we're out of ammunition sounds kind of fucked up to me. They would never tell you that. They would never, if that was true, ever say that publicly. So to think that we're out of ammunition is bizarre. It's not true. I'm telling you right now, it's not fucking true. We have fucking storage for munitions everywhere. These telling you guys. I told you about the bunkers, right? The U.S. was putting out bids for bunkers to be delivered in 5 days. 5 to 15 days, they said. And yeah, so, which brings us to and this is in relation to oil now. The question is, you have the baseline for when we start shutting in oil around the world, and then you start questioning who has more oil than they say they have. And it also brings up the question of, are tankers getting through that nobody's telling us? And there are reports from civilian intelligence reports saying that tankers are getting through, even though the U.S. continues to say that they're not. And you have the Strait of Hormuz, or you have a rate yesterday, the Iranians had some video of them boarding some tankers. You know, that boarding, you could see that it was staged. They were likely boarded and that ship was likely taken, but it was likely staged. The guys in the goofy masks running around with no like fake tactical shit on. When you're watching those videos, you have to think about, like, if you watched the videos yesterday of the boarding of tankers, none of that seemed like a B movie to you. Like, it seemed like a B movie to me. It didn't seem real. Not in today's world. So did they seize the tanker? Probably. Was it messy? Probably. But was it as tactical, cool as they showed it on that video? More than likely not. In practical terms, commodity markets are always forced into equilibrium. Sorry. Which brings us to our latest note, in which Canivas finds that something is off with the oil supply demand math. And this article is from Thursday at 10:40 p.m. On Wednesday, during the day, on this show, I told you that the math is fucking off. And I showed you some of the other reasons why the math was off. That oil is likely getting through, and it's not being discussed, publicly at least. Which brings us to her latest note, in which Kaniva finds that something is off with the oil supply demand math. And her conclusion is that in practical terms, oil price have to go up much, much more, even as product supply shrinks due to far more demand destruction.
On the situation, says we've resorted to negotiations with Israel in order to avoid a long war.
Which brings us to her latest note, in which Kaniva finds that, quote, something is off with the oil supply demand math. And her conclusion is that, quote, in practical terms, end quote, oil prices have to go up much, much more, even as product supply shrinks due to far more demand destruction before we reach a tentative equilibrium, one which will result in far more pain for consumers and, yes, stocks. As the JPM strategist explains, in practical terms, commodity markets are always forced into equilibrium. The market must clear. For physical commodities, the daily accounting is straightforward. Supply plus inventory withdrawals equals consumption plus inventory builds. If production falls short of desired demand, the gap can't persist. The system adjusts first through spare production capacity. Listen to this closely here. The system adjusts first through spare production capacity, then through inventory draws. As inventories tighten, prices rise to ration consumption. In accounting terms, flows must match almost in real time. In economic terms, however, prices can be far from equilibrium as they move sharply to whatever level is needed to restore balance. Oil is the clearest example because short-run demand is relatively inelastic. Transportation still needs gasoline and diesel, airlines still need jet fuel, and petrochemical plants still need feedstock. As a result, even a modest supply loss can produce outside price moves as the market rations scarce barrels. In a major disruption such as this one, the balancing sequence typically runs as follows. Spare capacity is activated first. Inventories are drawn next. Then emergency releases and refinery run cuts follow. Finally, higher prices force demand lower. So this harkens to what I was telling you earlier, which is time. The time for these things to take place, and then you mix in a bunch of other shit. Like, you can mix, if we have a resolution here in Iran at any point in the coming weeks, you're going to get that excitement, right? And you have all this system has to go. We have to go through this entire system of the actual shock at the pump in front of you, and even if it's being experienced in other countries right now, in the U.S., it's going to take time. Even if we're seeing it in, like, even if you're seeing it in commodities, you like even like there's ranchers and farmers right now that are selling. They're foregoing a season of planting or a season of raising livestock to sell their fertilizer. So they're still alive. They haven't imploded or collapsed. They're actually selling their fertilizer to the highest bidder. And in turn, we will pay for that, right? We'll pay higher prices at the pump. We'll pay higher prices at the store. But there's a window in there where we can absorb those prices too. So even when you're getting rid of all the stuff, you get the sequence taking place. Then you've got the sequence of, hey, we can handle this. We can handle this. That is called time. So if we squeeze up and keep going higher into middle of summer, let's call it middle of June, middle of July, start trading sideways for that next earnings reports, then there's plenty of room, isn't there, for the market to absorb that shock coming down the pipe? Or at least that's the thesis, right? We'll deal with it in the future. We'll deal with it when we get there, when all this stuff starts hitting. And on top of that, that could limit the downside in the fall if we have resolution of some kind, where we start forward looking again. And you have maybe the intervention of the Fed or the Treasury or the executive. Squeezing higher right now, trading up into 712.10. While the closure of the Strait of Hormuz should be a clear example of this dynamic, Kaniva concludes that, quote, something is off, here is the math, end quote. The disruption to global supply totaled 9.1 million barrels per day, but I was going to say MBD in March, and widened to 13.7 MBD in April. Yet the first balancing lever, the first balancing lever, which is spare capacity, failed to engage for a simple reason. So we didn't hit it. Why? Nearly all of the world's spare capacity is concentrated in Saudi Arabia and the UAE, and it was effectively cut off from global oil markets, stripping the industry of its traditional shock absorber. In the U.S., the world's marginal supplier, even a sharp price increase cannot translate into immediate shale growth at this scale. Meaningful supply response typically takes 3 to 6 months to materialize, with only 0.3 to 0.7 MBD likely over that window. Larger gains of up to 1 MBD tend to emerge only over 6 to 12 months. Russia has some spare capacity, but it is limited to roughly 300 KBD. Even with that cushion, supply growth remains challenging amid ongoing attacks on energy infrastructure, including ports and pipelines, with Russian supply down 350 KBD in recent weeks. With spare capacity beginning to become constrained, the second lever, inventories, was activated almost immediately. JP Morgan estimates that observable commercial and strategic inventories grew by 4 million barrels per day in March and an extraordinary 7.1 in April. And since we do not have full visibility into all inventories, particularly product stocks, it is entirely possible that actual draws are materially larger than what is currently visible in reported data. Demand buckled as well. Observed global oil demand fell by an average of 2.8 MBD in March and is tracking a larger 4.3 MBD decline for so far in April. If you're in the U.S., you may not be feeling this, but in other nations, they're already taking austerity measures in their countries where they're keeping their own supplies. And they're also making buses and trains free. They're doing 4-day work weeks. They're doing work from home initiatives. So the rest of the world is already trying to offset some of this shock that is prolonging the shock from hitting the tape in equity markets. To put this in perspective, demand erosion at the peak of the GFC in January 2009 was on the scale of 2.5 million barrels per day as recession and weaker industrial activity weighed on consumption. What is striking is that these losses have occurred at prices that do not appear extreme in historical standards. Realized futures Brent prices averaged just under 100 billion barrels in both March and so far in April, while dated crude average Crude oil averaged $107 in March and $123 in April to date. I think there's even been reports of some countries paying upwards of $230, $260 a barrel. While dated crude oil averaged 107 in March and 123 in April to date. Granted, product prices have almost doubled from pre-war levels. Even so, prices do not seem high enough on their own to explain a drop in demand of this magnitude, or one that has unfolded this quickly. This suggests that much of the decline is not traditional, price-driven, quote, demand destruction, but rather forced demand loss caused by missing supply. Put differently, so do you understand this? Like, we have demand destruction right now, but it's not because we're in a recession where, hey, companies are blowing up and no one's spending any money. We already see this coming ahead, and so we're trying to deal with the shortages before they hit the street or our everyday lives. Put differently, physical shortages are constraining actual consumption. So what appears to be demand destruction is a supply loss showing up on the demand side of the ledger. The distinction is critical because it changes how we interpret the rebalancing now underway. It means that so far, most of the adjustment appears to have come through demand losses concentrated in the Middle East and frontier economies across Asia. Middle East remains at the epicenter of the shock as war-related disruptions are curbing consumption. Asia is next, reflecting its structural dependence on Gulf supply for both crude and refined products, particularly for petrochem feedstocks. Africa has also been hit. Many countries rely heavily on Gulf middle distillates, carry low inventories, and have limited fiscal capacity to absorb higher costs. As cargoes are diverted to higher bidding Asian markets, some buyers are simply priced out. Together, these regions account for 87% of the total 4.3 million barrels per day demand hit in April. So that demand hit is not hitting us, is it? It's not hitting the U.S. yet. It's going to, but not yet. The issue is arithmetic. The issue is arithmetic. If roughly 14 million barrels per day of supply has been removed, and even assuming an aggressive 8 million barrels per day contribution from inventory draws, the market would still need to clear an additional 2 million barrels per day through lower demand and through even larger inventory draws, which still means that we have time. Now, can this be absorbed? Probably not. Will we experience some kind of a minor recession or drawdown or have to absorb this in the fall or late midsummer or next spring? Of course. Is it eventually going to impact our markets? Of course. There'll be some kind of material draw or price drawdown in U.S. markets. But if it gets absorbed and the U.S. doesn't fall into that recession, that deep recession, recovery could be on a horizon at some point in the future. This to JPM is too large to be absorbed by emerging markets alone. In practical terms, Europe and the U.S. would also need to participate. So listen to that part closely. The U.S. will need to participate. And for that to happen, prices need to rise further, perhaps much further. I would expect that your price of gas could briefly hit $6 a gallon. I don't know that we could hit $7 or $9 a gallon. There's a small percentage chance, like 5 to 15% of 9. But I asked friends, I asked my kids, like this week I've been doing a bunch of shit with my kids. And it's like springtime. They have all this like stupid it's not stupid, I shouldn't say that. But there's a bunch of shit for kids right now. And I asked these people, like, can you afford a $6 a gallon? Can you afford a $9 a gallon? Can you afford 4 or 5? And the biggest response that I have right now is people are angry at the price of gas. They seem to say they could weather a price of $6 per gallon. At 9, they got freaked out. But they were like, we could do 6 here and there. I could probably handle that. And that's mostly what I heard from people this past week. Like, can the U.S. Can you go to work every day? You drive to work? Are you working where you're a painter? Can you handle $6 an hour? Yes. Cool. Can you handle $9? No. Okay, who do you pass that along to? Do you eat it or do you pass it along? I didn't want to know that. Answer that question too. And they all emphatically said we would push it along above $6 a gallon. So we need to see probably above $6 a gallon, or a sustained $6 a gallon, for this stuff to begin to be priced in. Here and there for like a month or two or a week or two, more than likely you're not going to see that a huge hit to the economy. So a smaller recession, even if we hit one. Europe, to be sure, Europe has already begun tightening, with disruptions further at reducing distillate availability into an already constrained diesel and jet fuel market. Remember, too, that I've said this to you in the past, when you have a recession, you need everyone to join in. If you're ever if you're ever watching like the 10s and 2s, or you're ever watching, they're like, I always hate the bond market predicting recessions, or the SAM rule, or all these other fucking rules they have. You really, if you want the best indicators for it, like starting from top to bottom, it's usually employment and inflation, two key ones. There are other key ones like GDP and stuff, but like those are the two easy ones you can usually look at if you're looking for a recession. And there's a third one. And the third one is the world. So when you're like, oh yeah, we're going to go into a recession, bro, and I'm looking around at Europe and I'm looking around at Asia, and I'm like, none of those countries are out of recession. None of them are showing recession. I get a little squirrely when I'm looking at unemployment, and I'm looking at not employment, unemployment, and I'm looking at inflation, and I'm looking at the world. And you'll always hear this like narrative, this like the sizzle, right? Oh, dude, we're going into a recession. How often do you do that, bro? I say it. I got a list of things that I run these articles all year long, and I get a million views in each one of them. One of them is recession is coming, recession risk. I'm like, dude, what about GDP? Well, unemployment. Let's go. Inflation's fine, man. The world is fine. Why are you running that story? Well, it gets readers. It makes people fearful. Now, in this case, it's different. In this case, a slight recession is scary, or scarier, when the world starts to hit recession territory. When you start seeing like the emerging markets in Asia, you start to see Europe trying to deal with it right now. That is cause for concern. Now, how bad is it? Is it a full-blown recession? Is it something like 2022? Where, let's look at 2022 really quick. Now, this was due to tightening, but similarly, in price action, should I just have gone to a day maybe? Oh, let's go to a day here. So I'm not trying to chase price all the way back here. Now, it's not the same price action, but I think the thesis from a lot of these doomers is that the price action is not the same, but here's your April low, right? And you're cranking up into the beginning of May. And in our case, it's to an ATH. You have the dump down here. You have the dump down here into June, not May 1st, but June 1st. And then we come back up here in 2022, and that marks the high. So if you have the high right now, right, just above the all-time high, you'd come up here, come back down, blast down for May, for most of May to the downside. And then you end up getting, instead of just the 8th, it's like the month of May is down. And then we do the big rip up into, so May go away, right? Is real this year. but then we still go back up into the summertime, and then we price this recession back into the fall and eventually recover to the upside. And does this make sense to you guys? I don't know if it does or doesn't. The price action is not the same, but the thesis is kind of similar. Let me go back down in here. So yeah, the U.S. begin tightening. Just watch this into 12 p.m. Just be standoffish in markets here until after 12. We don't know yet if the seller's going to step in here and try to hammer this thing down. Just be patient. No longs here. I already warned you to get out before we got to this part right here. Let the Marines do their thing. Changes to yellow for you just so you know that its flow is coming in at 12. All-time high right here. There's a lot of traffic up here to get through. So like starting to talk about like recession, like is there a chance of recession? Yes. How bad is it? We don't know yet. And the other thing too is if we get a recession, it's not going to be because of a business cycle recession. It's not like the business cycle has ended and it's an effect of that business cycle ended where we have demand destruction. It's something that can be front run before we get there, right? Where countries can be proactive and say, "Oh, we're going to do buses for this," and it's kind of similar to COVID in a way, right? We're going to do work from home. We're going to do 4-day work weeks in person. We're going to cut down one extra day. We're going to do buses and trains and blah blah this and blah blah that to try to stave off the impact of this recession. And if you think about on the other side of this, when you hear like Trump say something like, give him more rope. When you hear Trump saying things like, I'm fine, 2 more weeks, fine, 2 more weeks. And you hear like the peanut gallery. Oh, he's flip-flopping, he's taco time, and he's this, he's that. He doesn't know what he's doing. What he's doing is he's giving more rope. He's giving more rope for the destruction of Iran and the destruction of China. And he knows that one of two things, we come to one or two outcomes. We come to an outcome where World War III happens. You know, China is at a point where they have to decide with the destruction going on with oil in the Strait. They're going to have to make a decision. They either have to make a deal with the U.S. or you start to see Iran implode and you begin to see China implode too. And that could lead to war. And you've heard me say we push that here, right? So the U.S. is not going to back down, are they? They're not going to back down on the war over AI. They're not going to back down with China. Whether I want them to or not doesn't matter. They're not going to. So you're going to see this continue until something either breaks and the U.S. is better off, Europe is slightly better off, and the U.S. will support our partners in Asia. And you're going to see Iran implode to where the U.S. can step in or you're going to see a war. You will see a war with China because they're imploding as well right now. So it's one or the other. And I've always told you this, that the U.S. will take this to the end. So when you see like Trump saying, or you see like Trump out there, like it's hard to see what's like the narrative around it is like he doesn't know what he's doing. He's flip flopping right now. He's tacoing. He's doing this. He's doing that. In reality, it's more rope for those nations to hang themselves. And if they don't get it right now, if you don't get that war, or if you don't get the implosion of Iran, what you get is them forced to the table. In all outcomes, the U.S. wins as of right now, unless we have nuclear annihilation or something. And I don't think China wants that. They're not a dumb population. I don't think that they want World War III in any way, shape, or form. I don't think they're ready for it either right now. Even their strategic oil reserves is like, it's not as good as you think it is. You run through strategic reserves. China's strategic reserves and the U.S. is only like a month or two. It's not like it's years of oil capacity. So strategically, I don't think that they're in the right place, China, at this moment. And I think we see war one way or another, or, that Cold War that meets up at some point. And we were like that with Russia in the 60s, right? 50s, we had the buildup in the 50s and 60s, and we had the height of danger to the world for decades. Any of you that are alive were alive anyone alive before, like, let's call it 89 to 92. You guys all know what this is about, right? We've been here before. It's not the first rodeo for brink of the end of the world. And hopefully cooler heads prevail and more intelligent. And they have been more intelligent. And, if we get to that point where it is that devastating, you're not going to care about the stock market anyways, if we ever get there at that point. This to JPM is too large to be absorbed by emerging markets alone. In practical terms, Europe and the U.S. would also need to participate. And for that to happen, prices would need to rise further, perhaps much further. So we do need to get into like the 6 and above, the 7, the 8, and the $9. To be sure, Europe has already begun tightening, with disruptions further reducing distillate availability into an already constrained diesel and jet fuel market. The Americas are relatively more insulated in the near term thanks to greater domestic supply flexibility and inventory buffers. Even so, higher pump prices are starting to curb discretionary driving in the U.S.
To convey Iran's considerations in ending the war, according to Tasnim.
Whoa.
In WTI oil here is again, Iran's foreign minister is to convey Iran's considerations in ending the war. Again, some strength in the S&P 500.
Some strength?
Further weakness in oil coming through. Iran's foreign minister to convey Iran's considerations in ending the war, according to Tasnim.
New high right now. Whew. That was a target hit right there. Whew.
Also seeing from a CNN reporter on X, Trump is sending his special envoy Witkoff and Kushner to Pakistan to participate in talks with Iran's foreign minister Araghchi. So again, seeing a further weakness in oil, further strength in the S&P 500 here as well. Again, also seeing a CNN reporter on X. Trump is sending his special envoy Witkoff as well as Kushner to participate in talks with Iran's foreign minister Araghchi. Two U.S. administration officials telling CNN.
Come on, give me my fucking spy calls. Nope. I gotta stay in him still. God damn it. Christ. Fuck. I didn't sell yesterday in the high. I'm still long till Monday. Still not big enough for me. I've got calls that have been on all week. My calls these aren't zero dates. I've had calls on for Monday all week long. They printed yesterday briefly. I was too fucking busy here doing stupid shit. I still have them on. I got hedge on. I got 2 hedges on. I got weeklies that are for Monday on too, for on the call side. I thought maybe that spike I could get out. I got to stay in them right now. Okay, so this to JP. This to JP Morgan is too large to be absorbed by emerging markets alone. In practical terms, Europe and the U.S. would also need to participate. And for that to happen, prices would need to rise further, perhaps much further. To be sure, Europe has already begun tightening with disruptions, further reducing distillate availability into an already constrained diesel and jet fuel market. The Americas are relatively more insulated in the near term thanks to greater domestic supply flexibility and inventory buffers. Even so, higher pump prices are starting to curb discretionary driving in the U.S., while rising airfares are beginning to soften jet demand. A note on jet demand. You're like, oh, our airlines are going to go bankrupt. No. Airlines, what they're doing is they're selling their diesel and Jet A for profit, believe it or not. So it's the same thing as the ranchers and the farmers. They're selling. Still making profit by selling their jet fuel. And they're raising prices as well to curb demand.
And Vance's counterpart is not participating either. So again, because Galabaf's not attending, they're not expecting Vance to go either. However, the vice president will be on standby to travel to Islamabad if negotiations progress, they said, and members of his staff will be in the country and attending the talks.
But let's even talk about that. So, it says rising airfares are beginning to soften jet demand. I looked at flights yesterday. For Mother's Day. Every Mother's Day, I take my wife to do something. And I was looking at airfare. And like the gasoline for your cars, can you absorb $3 a gallon? If you're in LA, $6, $7 a gallon. Where I live, gas right now is between $3 and $4, depending on where you go. And airline tickets are going up, right? I looked at tickets yesterday, and I looked all over the U.S. I was able to find airfare for Mother's Day. This is in May, right? May 7th through the 11th, I think, or something like that. And I was able to find tickets to L.A. for $200. So I'm going to see my boy Doggone It. And then I saw tickets for
Google invest up to $40 billion into Anthropic.
200.
So again, that's
This was Delta.
to invest $40 billion in Anthropic. They initially commit to invest $10 billion in cash to Anthropic to provide at least 5 gigawatts of computing to the company.
I even found tickets to
invest the further $30 billion more in Anthropic if the target's hit, following a $10 billion initial investment.
By the way, this is the target right here. This is the target right now. Right where we are.
Alphabet shares spiking.
We should pull.
It's up around 1.4%.
We should have a pullback here. I even saw tickets for Atlanta, Georgia, for $150. $150. This is 3 weeks from today on Delta, and I was like, I can handle that. It's not $100 round trip. It's $150. I can usually get a ticket to Atlanta for like $75 to $100 each way. Or no, sorry, each way, somewhere in there. And I saw 150 round trip yesterday. So not that bad. And I would pay more. I would pay $200 to go to Atlanta right now. Knowing that we're in this oil shock right now. Yeah, it's $200, it's $300. I can still withstand that. If it was 4, 5, 6, 7, 8, maybe I couldn't, or would opt not to. But it's still reasonable, even though it's not as dirt cheap as it's been. By product, the pullback is emerging first in price-sensitive sectors with thinner margins, most notably aviation and petrochemicals, with petrochemical feedstocks bearing the brunt of the adjustment. Shortages of LPG, ethane, and naphtha from the Gulf have forced PDH units and steam crackers across Asia to slash operating rates or shut down altogether. Not good, right? LPG is also a key cooking fuel in India. And the latest official data shows that March LPG consumption fell by 13% year over year, according to JPM's estimates. This feedstock-driven weakness accounts for about 55% of the total 4.3 MBD demand loss in April. Jet fuel accounts for 11% of the total demand loss, largely reflecting grounded flights in the Middle East. Looking ahead to May, Caneva expects jet demand to weaken even further as airlines across Asia and Europe scale back activity. Gasoline prices have risen far less than distillates so far, reflecting limited reliance on Gulf supply. That insulation is likely to fade, however, as refinery constraints tighten broader product balances, especially as seasonal demand strengthens in the U.S. summer driving season. Not only that, but I want you to think about something too. You got to also remember that the U.S. is, I know people tell you that we're a net importer, but we're not. We're a slight net exporter because we make more money to export to buy cheaper shit elsewhere. So the U.S. actually does well with these rising prices. We have more money, more cash. The same thing with the idea that if you're a rancher or a farmer or an airline, you can try to quell demand, but then sell your allotment of these distillates and of the diesel and the gasoline because we're already well off in this country. So there's like a net effect in the back end where the U.S. actually comes out ahead. And all of this is due to all of that exploration that took place in the 90s and early 2000s. Ooh. I got something else I want to talk to you about really quick, too. Hold on 1 second here. So I want to see as we come into this, I want to watch this 720 right now.
So Nikkei report that bidders are to select clients for SoftBank US data center. Google and Microsoft are to be among those bidders. Oil prices extend losses, with WTI down more than $2.50 a barrel after reports that the US will send Witkoff and Kushner to Pakistan for Iran talks.
What the fuck is going on with this? I gotta show Winky this. Hold on here. This module is blocked from local security. Hold on here. This one right here. I click through the learn more. I think I might have screenshotted that too. Hold on. I'll show you what Microsoft or what MS said. Right here. This is the data sheet. Me too. I wondered if so. It's popping up when I launch. I'm not going to say what I'm talking to you in the Discord about it, but I don't want to say it publicly. Like that other thing that you think it is. Another guy said that could be like the guy that I trust on YouTube for like everything that I'm experiencing. I posted that, and he was like, "It could be what you said it was." He said the same thing to look for that thing. I'll just type it in the Discord. I agree. Here, I'll show, because I went down the rabbit hole of like all the other shit crashing on Streamlabs, and then the computer doing the other shit. I was like, I'm gonna type all of this in, and it said, and that one guy popped up. Here, I even saved this guy. Hold on. I bookmarked this video because I thought the same thing. What you were saying it could possibly be. I don't know where I booked it. It's right here. Let me see if we can find it. Remember, a couple things here for you. I did that too, Winky. I was like, I did the whole like YouTube University for this shit like the past couple days. Been like fucking, like, oh, 8 hour fucking, I got like 8 hours of fucking another 8 fucking hours of research. Here, let me see if I can find what this guy said. La 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 la. Come on here. Okay, so we're going to talk about a few things here. We're past our 1 right now. Our 2 is 717.78. I want to show you guys something here. We're coming into this 7175 and 7180 which is just above. Let's go up here. I want you to know that if you are in calls, with me, from earlier in the week, I want you to remember that as we come up in, if we come up into this zone right here, 7175, 7180, I'm out right up in here. Now there should be some exuberance up there, where a bunch of fucking bulls want to buy calls because of war ending or whatever, and excitement. You want to be ready to unload those fucking things up there. They're pretty good right now, but we're going to be looking for some kind of exuberance to sell into those people. So, doggone it, if you're out there watching this show, we're close, bro. It's close enough in horseshoes and hand grenades. If you want out, you can get out now. Here's 12 o'clock sellers we're going to look for. Right in here. Get rid of that. We wanted to take that out. Yeah, right about there. We just want to continue up to the right here. And what was that? Okay, we're good.
Confirmation now from a US official that Trump is sending US envoy Witkoff and Kushner to Pakistan for talks with Iranian foreign minister.
Let's check this VIX 9-day. VIX 9-day is sitting on its monthly trigger right now. We're either going to get a bloodbath or we're going to get a spot up, vol up, more than likely. Watch out for a massive squeeze. We're getting spot turning up on VIX 9-day, and price is heading higher right now. The low was 1684. We do still have some more gaps lower to close, though. Still have a gap to close at 1253. I don't think we can get down to $9.28 unless we get a truce. Not a truce. Yeah, truce, basically. An end of warfare. We could fucking moon. We need to get the meme out there for the meme of the whale and the ship or the airplane.
CNN report that the Trump administration freezes $344 million in crypto over links to Iran.
There's still this stuff down here too. This is gonna put the fucking screws to bears. Iran's foreign minister Aragachi is to convey Iran's considerations in ending war per Tasman. Trump sending Witkoff and Kushner to Pakistan for Iran talks with Iran's foreign minister. We have a few minutes here. I'm going to take a quick break here, guys. Let this cool off here for a minute. Can you get that to me and get it to the Discord too, so they have it? That'll be an interesting read. I gotta go potty. That's a nice candle, by the way. I'm looking at the daily candle right now, and the weekly candle looks fucking gorgeous right now. This is gonna piss off fucking bears, man. Closing on a high, weekly high. Woo! Sorry, I'm just going to just going potty really quick. All right, I gotta go potty. It's gonna be like 2 seconds.
So Axios reporter on X confirming that 2 US officials are confirmed to him that Witkoff and Kushner are expected to travel to Pakistan in the coming days for a meeting with the Iranian foreign minister to discuss the deal for ending the war.
Almost feels like a holiday here, doesn't it? Into the end of the day. We get a huge rip into the closing bell. R2 is 717.78. Also be aware of this. Do you see this? Do you see above here this red line right here? I have us today topping out right in here.
EU Trade Commissioner Seth.
Do you see that red bar above there? So do you know what's holding this up? Nothing. You know at 12 p.m. they're going to be sellers here, right? So you know that we're selling into you already. So we just got to be careful of where this winds up. There's a big stack down below here. Also note that the halfback trade has not been hit yet. That's these two lines right here. See this line right here? You might have seen me doing this work on the. You might have seen me doing the work. I'm not sure, but if there is going to be a dip buy, it should be here, in here somewhere. Now, like we like to stretch things, then all of a sudden it's like this. Remember yesterday when you had like a blast down in the middle of the day, 12:30, 1 in the afternoon? This is the setup for it. So we'll watch this closely here. Rich Pravorsky just put out a piece too a few minutes ago. Rich P did. And he mentions twice that they're going to try to pump the market today, and they'll try to pump the market into the weekend. And there's also a Nomura note that just dropped a few minutes ago. It's hot and fresh right off the presses. Did you email it to me? Thanks. Let me read through the Nomura note here.
And Sefcovic says, I met with Secretary Bessent and discussed cooperation on energy security.
Dude, what? Who are all these people? Like, I get emails now from like, I don't know who's doing this to me. It's somebody out there. I keep getting invited into like these groups for like PE and VC investment shit, like invite only newsletters. Like I'm not supposed to be. Not supposed to be reading it, but thank you, whoever out there does that stuff for me out there. I don't know who you are, but it's probably fucking doggone it if I had to guess. Can you ping me with that again? No, I don't fucking want another mortgage. See? Ugh. Oh, thanks. I see it. It's here. I'm just reading through my emails right now. Like I'm working on my credit right now, and they're like, "You want to buy a home, dude? You want a loan?" I'm like, "No, dude. I don't want a fucking loan. I don't want to buy any more fucking houses. I don't want to fucking. I just want to maintain my credit. I don't want to actually use it. I could claw. You know how many years it took me to claw myself out of fucking debt? I don't know about you out there, but like I ran the the American. So like there's an American dream. And the American dream is that you go to school, you get a job, and you pay taxes, and you get married, truthfully, because you pay less taxes, pump out a couple kids or adopt a couple kids or whatever, enjoy those tax benefits. You put yourself in a debt and you work your balls off forever until the debt finally catches up and just fucking eats you. Before you know it, you're like in a fucking nursing home for the state, and like because you have money, you gotta get rid of all your money and blah 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 blah. Like there's this whole cycle to this, right? Generationally. And it took me fucking years. I had a major I lost everything. I had a major house fire. I almost died, fucking whole family almost died years ago, and it put me so deep in the hole that I vowed to not live like that ever again. Like not drive the best fucking car, $100,000 goddamn car with a fucking huge payment, and pay my mortgage down and all this other shit, right? Pay for cash with everything. And my credit has been lacking due to that. When you remove yourself from the credit system, they don't like that at all. And I'll be honest, when I was in the credit system, you are better off, right? There's a little bit of like ego when you pay your debt off. Like there's no benefit to it. Not truly. It's more like it's kind of like saying, I don't know how to explain it, but it's kind of like people that pay off all of their debt and live debt free. It's not a plus one. But I enjoy that. Like I enjoy no debt. I fucking love it. I love waking up every morning. Like that stress that I had in my life. I had so many sleepless nights. Am I gonna get fired? Am I gonna get sick? Am I gonna die? Am I gonna cut my leg off and not be able to pay my mortgage, not be able to pay my insurances, all this other stupid shit. And it was the sort. If you're a person in the debt cycle, that's the norm, right? If you're the breadwinner in your family, that kind of stuff, like you worry. I don't know if you do or don't, but I did. And I'm sorry, I'm just reading through some emails right now, and they all want to give me fucking home loans, and I'm like, and those things stopped for me at some point because I don't use credit. Try not to. Once I got out of the debt trap, man, I'm telling you, there's no fucking feeling like that. Like literally zero debt. When you pay all that shit off, dude, the sense of relief that one feels like they're 20 years old again. It's like, woo! Never declared bankruptcy in my life, nothing. So like just like paying down your fucking debt, man, like literally paying your goddamn debt, and paying all that shit off was dope. But my credit's been suffering, so I've been trying to get my credit back to 800, and it's getting there. So I can tell because I'm getting all the emails. I'm like, oh, fuck off. Yeah, I don't disagree with like it's not good to be debt free. Not in our system, it isn't. It's very like it's almost, I want to call it like ego. But there's something to be said for like there's something to be said though when you pay off your like I don't have a mortgage anymore. I paid my fucking mortgage off. It's awesome. I fucking love it. I have a lot of free like I have a lot of like ability to do whatever the fuck I want like with cash. And I spend cash too. Like I don't do anything on credit. So like I'll go straight with cash and like buy a car or buy a house or buy a vacation or whatever. I save my money and then earn the interest off of it so that you know, I'm the bank now. So I loan myself the money. You know who taught me that was Joe Donut. Well, not taught me that, but Joe is like, what you do is you buy your car and then you pay yourself into savings and you earn the interest rather than the bank's earning it. It's fucking dope. I fucking love this shit. I fucking love it. I love being debt free. And I know that I shouldn't be, but I was looking at my credit, I don't know, 3 or 6 months ago or some shit, and I was like, I look like I'm not quite how did I describe it to my wife? I was like, I look like I'm not alive. Like, all of my credit history was starting to look stale and stuff, and like it's bizarre. Once you remove yourself from credit, you become a ghost. Like I didn't know that until I've never been debt free. So so I'm like, oh, I gotta do this and I gotta do that and I gotta do this and I gotta do that. And dude, the mental health. I'm already a stressed out person as it is, and like I'm always worrying and thinking and overthinking and the whole thing. So but I don't want to rebuild my credits to like 800 and have any real debt. I just want to not quite trick or game the system, but so I'm like back to paying off bills with credit and all that kind of stupid shit, and then paying it off immediately and all that stuff. Yeah, I've tricked people into that too. Like a thing I used to do is I used to go find like when I first got to Detroit, I was able to get really good deals on county auctions, and those deals were still pretty good, but they started wearing off a little bit. And I would find like I did a bunch of flips where these are horrible. I can't. Well, I felt like I was doing the good. I felt like I was doing a good. I was being a dick, but the same time, the people that I was doing it to were dickheads themselves. So what I would do is I would find houses that slumlords. I fucking hate slumlords. So let's start before this. So before I got to Detroit, I went into contract to buy a house before I got to Detroit. Sight unseen, I had relied upon pictures of of a rehabbed home. Signed a contract, put a bunch of money down. And on a lark, I flew to Detroit, and I went to go look at this house, and it was a scam. They rehabbed it, but the pictures were fucking scam, fake, not fake, but not real, showing what the rehab was, and the rehab was like bullshit. So I was paying for a rehab in a house that was garbage. So I had to make a decision if I was going to break the agreement and likely would not recover my money. Because I had signed a purchase agreement, and it's just like a fucking grift, you know? Like rehabbers and flippers do this all the goddamn time. I was so fucking angry when that happened. I lost a bunch of money, and I was unsure at that time if it was going to be damaging to me because I had just come out of a fire and I didn't have a ton of free cash flow, and I knew I was going to have to work in this house still with the rehab done. And I was like, there was like move my family, all this other, like a bunch of fucking money going out the fucking door, like 6 figures going out the goddamn door in total. So when I broke the agreement, I was already down tens of thousands of dollars, and I was pretty angry about it. So when I got to Detroit, I was buying, not land bank, but I was buying the auction houses at the county level auctions. And they were okay, but at the time, what I did was they weren't great. So if I was out of auction season, what I would do is I would find this is on the same credit thing. I would find. Anyways, I had this huge distaste for flippers, a huge distaste for absent landlords. I had a huge distaste for foreign speculators. And I knew a lot of these people, and I got to know them even more and more and more as time passed, and I was working in Detroit. And I despised them. Behind the scenes, I was very angry. And I would find slumlords. What slumlords will do is, so Detroit started changing. Like when I first got to Detroit, it was like the Wild West, and the Wild West with the city and the county too. And you didn't really have to do a ton as a landlord for your tenants. And then they started changing the laws here, improving the laws, forcing landlords to no longer abate, as an example, like lead abatement in the pipes, lead abatement in the paint, in the windows, you name it. It's all over anything that was pre 1978, I think. So they started tightening up the rules for the landlord to the renter and the rehabbing stuff. And they're getting better and better too. They're still not quite there, but they're getting better. So at any rate, landlords were always playing hide and seek with tenants, basically. And there was like a rise at some point in Detroit. There was a rise in land contracts, and they were predatory land contracts in Detroit. And so a lot of Detroiters got caught in those, and they would get eaten alive. And the real problem with land contract is, to someone who doesn't have any money, they look very appealing, but they're very beneficial towards a landlord. So a landlord does not treat a renter the same when they're under a land contract. They treat you like an owner.
Count numbers.
So you have
rigs at the prior was 543. Oil rigs at the prior was 410.
You're not constrained by 1.5 times rent for security deposits. So instead of getting, let's say you have like a fucking $1,000 a month house or something, right? As an example, $1,000, you can get another $1,500 from a tenant. If I have that same house and I put you in a land contract, you have to give me $10,000 at least, if not more. So that's your security deposit now. There's no limit on it. And then guess what else? Detroit has a really good anti-eviction policy for renters. And it's famous. It pisses people off. Like, it costs attorneys big money. So these landlords, what they're doing is they're switching to the land contract. They're getting a bunch of money out of you, and then you get treated like an owner from the courts, not a renter. So instead of like 90 days and money inside of whatever the fuck it's called when they put it in I don't know why I can't remember the name of it right now, but Anyways, a bunch of different rules. So the rules are less though if you're a land contract buyer. You have 3 days in Michigan, at least. If you fail to pay your mortgage, 3 days later, I can evict your ass, and it's gone. Like, you're out of there. So, and there's some other benefits too, because the new homeowner thinks that they have the best, or that they have their first chance at home ownership. So they give you about 10 grand or so or more. They pay every month, and if they don't, you kick them out. And they don't realize that. And the last part is they feel like they own the home, so they're doing improvements where you don't have to. Like, you don't have to abate anything. You don't have to abate anything. You don't have to fucking do shit. And the new homeowner loves it. They're like, oh God, everything's awesome. I'm going to do this work. And now they're responsible for all the maintenance too. Like, there's so many benefits to the landlord as a land contract holder. And so what I would do is I would find these land contract fucking scammers, and I would portray myself as not having any money. And so evil. And so I would go under contract with these fucking guys, and then, of course, I would pay the full note off and have it in the contract that if there's no penalties if I pay the fucking thing off, and the guy doesn't think that I'm going to pay the fucking thing off. And then I would go in there and swoop in and buy it and then flip it as quickly as possible, because these guys were using it as regular income. Because there's like 2 kinds of flippers. There's like the buy and hold, and then there's the buy and flip, right? And the buy and holders, they're the worst. They're like usually absentee. They don't live here. Sometimes they even live in other goddamn countries. They're in buyer groups in other countries. It's a big thing. A lot of the development that you see in the U.S. is not tracked. So, like, when you hear like the discussions, like corporations own all these homes, it's not quite that. There's like investment groups that are, they like own, but they don't own. Like, they'll come in and like swoop in, and they do it through proxies in the U.S. too. So you'll have like a guy, let's say a guy in L.A. owns a bunch of houses, but in reality, it's like a buyer group from another country. So there's like a lot of like hidden layers of actually who owns these houses and stuff. Anyways, just back on the credit thing, it was always awesome to be able to go in and do that and just be like, there was one guy I bought a house from. This is true. This is fucking crazy. I bought a land contract, paid it off, and they tried to present me with a quick claim deed, and I had in the contract when I bought it that they would have to furnish a warranty deed. They didn't want to give me that, of course, and so I had to stick the attorneys on them. And then my attorney spoke to the slumlord's attorney, and the other attorney was pretty frank. He was like, this is the first time. He's like, this guy owns homes all over Michigan, and in Detroit, and this is the first time that he's ever had to actually sell a fucking property and hand the fucking deed over. And the guy was fucking pissed. So we took it to court, of course, and won. And the guy was going to be in some real deep shit for fraud, of course, right? And needless to say, I did get the warranty deed, but it was a nice little like fuck you to getting fucked over in Detroit by these scumbags. Like, I've always been a believer in like I'm not really on the full side of.
Now at the top, we get the release of the weekly Baker Hughes rig count data. Total rigs prior 543, oil rigs prior 410.
Like, I do think that there's always a need for a landlord. There is. Not everybody wants to goddamn own a fucking house. So you have to be able to rent a goddamn place, right? But at the same time, it's always infuriated me when you're an absent landlord. And I think it matters, like, when you live where you own, and you are a participant in that community, paying taxes, taking care of the community, giving to your community, all that stuff, right? I think that matters. Like, when your tenant knows who you are, they know where you live. You're right down the goddamn street. They know that you care. They know your kids go to school. They know you're working in town. All that kind of stuff. It makes a huge goddamn difference. Not to everybody. There's still like professional goddamn renter grifters out there. There's tons of them. Like, rental grift here is huge too. So I can't blame it all on the absent landlords. because of course Detroiters are smart as fuck. They've been through the ringer, so they will try to scam too. These landlords that are absent. So there's like a tug and pull in this too. There's like, for everything I'm saying, there's another side to the story. I've never seen tenants more fucking fucked up than I have here in Detroit. No offense to Detroiters, but I've been on that end of it too. And I've never seen anything crazy. There are like literal groups here in Detroit of committing fraud against landlords.
CNN article or reporter,
but it's ripe for it to happen because of the absentee landlord thing. It's ripe for that fraud to take place. So, anyways, going back to that credit thing, it was really nice to fucking get some goddamn coming punts in those fuckers. You know, I hate it. Like when I moved here, not all of it, but the flips now and the rehabs today are getting a lot better in Detroit. The rehabs that I see today, they take everything down to the goddamn stud, which is what you should do. If you're ever going to rehab a home, in my view, you basically you're building a house. Other than the skeleton of the home, I think you take everything off and redo it all, and you repair anything that needs repaired. Expansion, larger rooms. You should be doing all new
the question of the US
HVAC, electric, plumbing, you name it. Everything should be brand fucking new. It's like basically a brand new goddamn house, right? That's how I feel about it. And then if you're gonna do a rental, I feel like it should be done so that why would you ever want to come back and do it again? Like, why in the fuck? Like, the guys would come to Michigan and they're like slamming down linoleum, and then of course it breaks, and they slam another piece down, charge tenant. It's just like this big vicious cycle of like chasing home, basically chasing like that 20% every year over year, and they'll do anything to chase that. Like a landlord, these professional landlords, they'll do anything to get that 20%, even if it's just a Band-Aid. So the Band-Aids build up, the tenants get pissed off, becomes a big thing. I've never been a believer in that. I've always been like, if you lived here and you owned your homes and you wanted to keep them for generations or whatever to rent out, and you shouldn't have like, I mean, I don't know. I guess if you want 50 or 100 of them, that's fine if you're living here. But I've always hated that absentee fucking chasing home landlord for people that are living their lives. They're just trying to goddamn survive. And that shit's always bothered the fuck out of me. And Detroit's getting better. Don't get me wrong. Like, through all of this, like this, we have more money in the city. We have more investors that are living here. We have more jobs. We have more everything. The city government has done a great fucking job. County government's doing a great job overall to try to change the residential market in Detroit. And some landlords do care. And if not, the county is forcing them to care at some point. So the stock is getting better in Detroit, but it wasn't like that when I first got here. When I first got here, it was fucking brutal. It was the wild goddamn West. The only thing that pisses me off, or no, pissed me off, like I always have these regrets in life. Like I owned Bitcoin when it was 30 cents, 15 cents, $1.30, somewhere in there. I used to use it to buy Molly for Burning Man years ago. That's the truth. And then I don't do that anymore, but so that's how I acquired that shit. And then I had it, some of it left over as I started like raising kids and stuff. I accumulated Bitcoin, and then I ended up having to sell it for my kids. At some point, there was a big whammy, and wife's like, I need money. I had like, it wasn't a bunch. At that time, it was, I guess it would be worth like, or maybe it would be like 15 or 20 grand. At the time, I think it was like maybe $5,000 worth of Bitcoin, but it was fucking, I had a ton of coins. So, but I've always kicked myself through my life. I always had those moments where I'm like, I look back and I go, I never should have did this. And
544 for total rig count.
Never should have got rid of that. I should have never listened to my wife. I should have, like, when you get married, right? Or when I got married, I wasn't married for a long time. My wife and I never got married. My father-in-law got mad at me.
407 for oil rigs.
For us not getting married. That's a whole other goddamn story. But eventually I did get married, and for me at least, if you get married, it's like it's not quite a business contract, but it's kind of close to it. And you like as a man, like women consider men predators. I don't know if you know that. If you're a man, women consider you and I predators. So if a woman is gonna marry you, normally it's because they don't think you're gonna do something really bad to them, either physically or whatever. You know, you're not gonna abuse them. And then the other thing is, the there's like an agreement. You know, you're not a predator. You're like, I'm not a predator. I come in peace. And then the other part of it is, I don't know where the fuck I'm going with that. I just want to get off that topic. But my wife's over there. I don't want her hearing me talking about this stuff. She's in the other room, but she can hear me. She's like right over there. I'll wait here till she leaves. I'll continue the conversation in a minute. Well, yeah, it's a contract, right? And like Detroit was like the wild fucking west. Like when I first got here, you know, like you go to the like. Anyways, you get into this contract with your wife, right? She's gone. So you get into a contract with your wife, and or at least for me, I always knew that women consider men predators, and I'm like, hey, I'm not a predator. Come in peace, right? Then the second part of that is, if you get married to them, you have to give up a little bit of decision making. You like, for me at least in my family, only the really big things would I step in and say I want to do something different. Day to day, month in, month out stuff, my wife makes all the decisions. I don't want to admit that publicly, but I don't want to say it in front of her ass either. But basically, they make the decisions. Happy wife, happy life. I'm gonna say that again to you. I'm gonna be honest with you. Happy fucking wife, happy fucking life. If your wife trusts you, you're not beating your wife up in some way, physical, mental, she'll have sex with you.
Continue the negotiations.
Earlier this week, I was talking to her about earlier this week. I was trying to lay on what's the thing, the pickup artist stuff. I read like an article about pickup artists, so I tried some pickup artist moves on her. She wasn't listening to any of that shit from me, and I was like, I gotta go talk to doggone it and instill some of his fucking moves because that ain't working. But the thing is, the idea here is that when you get married, remember that women don't trust you as a man, so you got to be trustworthy. Second part is, it's kind of, Joe Donut calls it a beneficial dictatorship. He's like, my family's like a beneficial dictatorship. That's what my family's like. I'm the dictator, but it's beneficial, which means what? I try not to say, hey, we're going to do this and we're going to do that, or try to lead her and them to that decision with being nice, beneficial, being a nice man, right? So there's been a lot of moments in my life where I've lost.
I love it says Iran productive.
So like Bitcoin is one of them. There's a bunch of others too. And there's a bunch of them. The moments in my life where I should have stayed invested and I didn't. And for whatever reason, like my wife cares more about my goddamn kids than me and what I think is best, right? So as I've gotten older, though, I'm able to take some of that back now. And on that same topic with Bitcoin, housing, when I moved to Detroit, I was always looking for the next hit, like
remains deeply involved and
buy a house for $2,000, flip it for $4,000, buy a house for $5,000, flip for 10. Sometimes, like, I'm not going to admit to that in stream, but there are ways for you to, like, you know, like hold paper and not even have your signature on it. You know, it's like you're just one owner to the next owner. That's illegal, highly illegal. You have to have a real estate license to do that. But anyways, the greater point is, when I moved to Detroit, I should have fucking kept all those goddamn houses, and I need money for my family, you know? So I'm constantly fucking flipping houses and flipping fucking houses, and that's another mistake I've made in my life. Had I just held on to all those goddamn properties and paid the taxes every year, it'd be worth it'd probably be worth a couple $100 million. That much. It was that fucking Wild West around here at that time. You can't even buy, like, when I first got here, it wasn't even that good when I got here, but it was even better. You could buy mansions here for a goddamn dollar. You can't buy a fucking mansion today in Detroit, unrehabbed, for less than $500,000. They were going for a goddamn dollar. You can't buy a single family home in Michigan and Detroit anymore less than roughly, unless it's a burned out shell today, is like 30 to 50 grand. A regular house in need of rehab is like 70 to 80. And up, of course. But I wish I goddamn bought all those goddamn houses and just like sat on them. Wish I fucking did that. I'm never doing that shit again, though. Now that the kids are getting older, I have had the conversation with my wife a few times. Actually, it's been difficult for us because we're so set in our ways that I have to revisit it and say, okay, kids are getting older. Now I want to start taking back some of my decision making
of the Strait of Hormuz and enriched uranium. Messages are being exchanged concerning these matters.
And part of that too is because my dad, he was in real estate when I was a kid, and he ended up losing all of his real estate from the 1987 crash. He had more real estate when he got older, but he ended up losing a bunch of real estate in the late 80s. It was bad. And they told me he wasn't going to lose anything. He lost everything. Mom was crying on the hill. It was fucked up. But my dad could have saved one of his houses, and he didn't. And he gave it up, and he didn't have to give it up. And that house today is worth fucking stupid money. It was a triple decker, like at least a few thousand square feet, right in on the Jamaica Way by in Boston, and it's worth millions of dollars today. And now I'm like, I don't ever want to sell any of this property. I want to, and sometimes I get the itch to sell. I've sold some in the past, but I've been accumulating some more property, and I don't ever want to sell a goddamn property ever again. Like, I want to hold them right into my fucking death. But of course, that's from wisdom, right? Or wisdom looking at my dad, and wisdom for my own decisions I had to make for the betterment of or for the health and welfare of my family. I don't know if any of you have been through that with your own lives. I was in the grind for decades, raising kids and shit. Raising kids is expensive as fuck. Anybody know that out there? If you don't have kids, man, it is not like, I never understood why people had kids.
It says the Iran mission has transitioned into diplomatic phase.
Eventually hating their kids or looking at kids as a burden. I never wanted that with my children. Like if I'm going to have a child, I want to be involved in their life and be not their friend, but you're not your friend to your child, but I want to know them. I want to like them. I want to help them. I want to experience life with them. All the beautiful things of life with kids. So we did that successfully at this point. I got to knock on fucking wood because I still got one more that's in school or in grade school right now, and she's the last one. And if you're a younger man, there is light at the end of the tunnel. If you give up those things for a loved one, it could be if you're married to another man or a woman married to a woman. It doesn't matter. Like, doesn't mean man or woman. You're like a partner, a life partner. You give up certain things for that. And whatever you're good at, you do, and whatever they're good at, they do, whatever that may be. And when you have those kids, it's more important. If you're going to have children, it's more important to do that. And then when the kids are all off and running and off, they're like starting to like looking at the last one, going, they're going to be okay. And then be bumps in the road and things that'll happen. and some things you have no control over, right? Sometimes your kids, you can do everything good for them and they're not good. They don't turn out good, or they have other problems. They have things you can't, like they may have a congenital defect of some kind, or they run into some issues in school or whatever it may be, that you can't control. But if you do your best and they don't have any problems, then get out of the fucking nest. You can go back to that thing that made you awesome when you married your wife again, or when you first married your wife. You could go revert back to some of that. All those great things that your wife knew that she could rely upon. You can start benefiting from that later in life when you're in your 50s and 60s and 70s and shit. And most adults experience this when they start getting in their late 40s, 50s, 60s, 70s. They start to see the fruitions of all their hard work. If you just like keep pounding and pounding and pounding and pounding, pounding, you'll get there. You will. You'll get through raising kids, and there's a light on the other side of that tunnel, I promise you. If, God forbid, nothing tragic happens to your children that require your living that life with them for multiple decades after they've gone. We all know that happens, right? Yeah, no, it's not fucking cheap. Oh yeah, fucking school, dude. The money I pay for fucking school is stupid. It's fucking stupid. I got a daughter in University of Michigan right now. That is not cheap by any stretch of the imagination. It's not cheap. It's just a big giant fucking money suck. And I got one more. And if she goes to a good school or whatever, I begged her to. Dude, my oldest daughter was going. She wanted to go to UMass, or she got accepted to UMass and wanted to go there because of it's Boston. And I just looked at the number. I ran the numbers, and I was like, I don't want to do that. I was like, I want you to go to University of Michigan. I was like, I want you to go to an in-state school. I was like, because it's not just the tuition. It's like the tuition, the boarding, the food, the fucking car, and the insurance. And my kid don't work. Like she works for me a little bit, but she doesn't have a real goddamn job. And I've always told the kids, if you ever want to work, or whenever you're ready to work, I'm fine with it. Like if you want to work at night, if you want to quit high school and start working, you can do that. You want to quit or finish high school and start working, do that. You want to keep going to school, benefit yourself, keep doing that as long as you want, and I'll keep supporting you. Because I already know, I have fights with my family about this. My family hates that my kids don't work, and I'm like, I've always looked at work like real work, like working where you have to take care of yourself. Not the work that they do to learn how to work, but the work that they do.
According to Mayor News, the controlled destruction of ammunition is the reason for the explosion sound in Kermanshah.
Like once a kid goes to work, they're part of or functioning member of society. So they're adults. In my eyes, I see a child as an adult when they're got a job and they're paying for their bills, and they have their whole fucking life to be an adult. In my view, that they I feel like kids, they don't get enough time to be kids, to enjoy life, to have less stress, to have the enjoyment. They have, the brains are forming. They get into the mid-20s, and then they can soak up as much information as they possibly fucking can, and become better people in life. So, anyways, I think by being supportive of my kids too, in terms of if you only want to go finish 8th grade and start working, or graduate high school and start working, or go to tech school and start working, I think by giving them all those options, it eased a lot of the pain with my kids too. But instead of saying you're gonna do this and you're gonna do that, I think that kind of helped. Watch out for a flush up here. I think we're gonna get a flush in here, so be careful here. Watch out for a flush. We're really consolidating here. See if we can get a midday flush. This could be the top too. So again, without more news.
From Mayor News, the controlled destruction of unexploded US-Israel ammunition is the reason for the explosion sound in Kermanshah, Iran.
I think by doing that, I don't know how I did it, how I worded it to my kids, but that was the gist, I love you, and I love you if you're a pole dancer. I'll love you if you're a sanitation worker. I'll love you if you're a fucking, I don't care what you are. I love you no matter what. whatever you choose, the path in life, I'll love you and support you through all of it. But once you become an adult, I am going to treat you like an adult, right? And you're going to be expected to be an adult. Your boss is going to expect you to be an adult. Your landlord's going to expect you to be an adult. There's a moment where mommy and daddy is not going to be able to be there to help you, right? Once you enter that adulthood, it's kind of like the relationship to an extent changes to some extent because you can't save them from those things. Like when they're still kids, you still have some sort of
Furthermore, from Fitch,
ability to save a kid. Even kids legally, as long as they're still in college, they're still eligible for insurance
likely to continue through
until I think they're 24. If they live in your house or they're going to college, like they're still getting insurance. They still get treated like a child, believe it or not, legally. Not if they commit a major crime, but they'll call your ass as a parent. Like they get arrested or something. They'll still call you, even if they're like 18, 19, 20 years old. They'll still call.
Speaking to reporters,
I know that.
Want to talk in person. We hope.
I got arrested I got arrested for an unpaid ticket when I was a teenager. I was about 19 or 20 or something. But I was in college and I was in the army. Police still call my dad still because I'm still a student at an ID for college. True story. The police were like, I wasn't arrested for like a crime. It was because it was an unpaid ticket that I had, speeding ticket. And they were like, you're still viewed as a child right now. And I'm like, what? Oh, they wouldn't let me out of the jail. You know what? They needed my dad to come down. True story. Yeah, I think it's 26 or something like that. It's really funky. Like they're adults, but they're not if they're still in school. And like they're still an adult. Like they're still liable for major crimes, like shit like that. But for non-stuff like that, non-criminal stuff, they the authorities still treat them as children. So I kind of follow that same kind of a thing with the kids. Anyways, whatever. Okay, so we got something I can fill your time with as we consolidate here and distribute before we make the leg higher, if we even do. That could be the high, believe it or not. We're fairly close. And hand grenades and horseshoes. If there is some kind of if the war ended, there's likely another squeeze in here to trade that 7,200. What you'll see is hedging come off the market, and they'll chase and become buyers, right?
Deliver here.
Excuse me.
Fed case not necessarily dropped. That's referring to earlier headline with the DOJ saying they were not going to progress the case against Fed Chair Powell.
They're not going to. They can't. There's no fucking case that they can do. They got shit. The courts told them to eat bags of dicks. There's no goddamn prosecution of Jerome Powell. There never was. It's just throwing shit against the wall. Anyways, we're gonna move on to something else here. So Pravorsky came out today. Rich P came out and he made a couple comments. I posted it to you in the Discord. You want to read that whole note because he said you're going to get good news today and you're likely going to get good news into the end of today, into the weekend. But his point stands that as we squeeze up there into 7,200, it is a source of supply into the marketplace. And you want to be looking at that 7,200, 7,180 as a source of supply in the markets. So everybody's excited, goes up, you sell into them for a roll down in the next couple weeks. Now, there's another note that was just made public just now, and it's from Nomura. And I'm assuming that this note was written before this news that broke this morning, so you have to give Charlie a break on this news. I haven't read it yet at all. I haven't consumed it. So I'm going to be honest with you, I haven't read. I don't know what the fuck he's saying in this letter. I've got it open in front of me. I'm going to read it to you. And this is from, as Volwiz calls him, the celebrity quant Charles McGilligot. Hold on, I got to send it to him too. Hold on a second here. Nomura Securities, Charles McGilligot. He's a great trader. This guy, if you don't know who he is, most of you probably do know who he is, but if you don't, McGilligot is a famous bear, but he is not like Burry. if you're a bear, you should like McElligott. He's like an actionable bear. He's almost like, who's that guy that does the YouTube channel with the cool? There's a guy that does like, there's a bear out there that has a highly produced show. I forget his name right now. I haven't watched him in years now, but I hope he's still alive. He has like a sexy Spanish Antonio Banderas voice, and he does this highly produced bear show every night or two. And
so again, Iranian officials
he gets through all of his bear shit, and then he gives you the actual trades at the end of the show. It's great. I forget his name right now. The something of Wall Street or whatever. I don't know what he's called. Maverick of Wall Street, maybe? Wall Street Maverick? I don't remember. Anyways, that fucking guy. He's a great bear too. He like does nighttime videos. He tells you all the reasons why the world's supposed to end. And then he gives you his trades, and his trades don't match up to anything that he said. And McElligott is like that. He's a bear. He loves sell side. And a lot of traders, 30% of traders love sell side. So if you are on sell side, this guy you should listen to, because he'll give you the meat and potatoes. He'll say, I know we're supposed to do this over here and go to zero, but I'm going to give you the actionable stuff. And the benefit of that is you're not drinking the Kool-Aid. So where you'll get like a doomer that'll say we're going to zero, that doomer exits before. That's where McElligott exits. So he gives it to you the straight. So I'm going to read it to you right now, what he has to say without him knowing about this new information. Ready? It's a good Friday here. You guys are getting a white paper from Nomura right now. Desensitized to war macro and dialed back into earnings macro. 84% of SPX 500's companies reporting so far have come in above consensus on EPS. We already know that the analysts that give the EPSs, it's a game of cat and mouse between the companies and them, and also we tend to beat analysts' expectations about 70% of the time. So far, it's been like beats across the board, generally speaking. It's like almost beat. So everyone's accumulating.
Arrival in Pakistan have not been determined yet.
Everyone's accumulating into this earnings season. We've switched gears in McElligott's viewpoint from macro war doom to macro everybody's gonna fucking beat. Let's make a bunch of money and take it to 420 to 720, and then we'll sell into the reports on highs. That's the thesis, at least. So 84% of SPX 700. So 84% is higher than 70. It's on average about 70. So 84% is really high. 84% of SPX 500 companies reporting so far have come in above consensus on EPS, with 74% above consensus on revs as well. Particularly going back to future on the feel-good economic tailwinds via A1 hyperscaler capex, and 2, the OBA 100% capex depreciation and tax cut stimulus catalysts. The massive capex spend from the largest cloud providers, negative $600 billion this year, looking to negative $1 trillion next year, continues to flow through into the U.S. economy and creating a lumpy, non-linear multiplier effect via data center construction and AI infrastructure, semiconductors, industrial equipment, utilities, and specialized services, which is further broadened out beyond the Mag 7 into a general industrial stimulus of the tax bill's own cuts, tailwinds, plus capex pull forward inducements. Accordingly, our U.S. data is reaccelerating, as seen with April flash PMI moving up to 52 versus 50.6 expected, with both manufacturing at 54 and services at 51.3, printing above expectations. While conversely, for context, European PMIs show the opposite. So I want you to think about this. I've harped on this now for a long fucking time with you guys about how the economy is changing in the United States. And no one wants to admit this. And Europe is not on board with this either. You can see it clear as day. Europe saying we're going to make new, in Canada too, right? We're going to make new deals with China. And why is all this happening? What's going on? Please don't take the pacifier away from me. And the U.S. is like, well, sorry, buddy. We're fucking building our own industrial production ability. We're reforming our whole economy over here on AI and on self-sufficiency from the East. You can come with us, or we can drag you kicking and screaming there. And also, you have like the de-dollarization bears and all this noise from doomers, and what they're not accounting for is the wealth of the United States coming back into what made us special, what got us here, what got us to the point to be able to be the country that outsourced all of its manufacturing ability. We sold ourselves down the river, didn't we? In the 80s and 90s. We started earlier than that, but it got really bad from I would say like right when you could probably tie it into Sayers and Roebuck would be who to tie it into. Craftsman Tools, the easiest way to look at it. Cheap Chinese junk, right? And it's been like that now for decades. To the point where what are we consuming? Throwaway junk, right?
Parliamentary Speaker won't be joining Iran's Foreign Minister Araghchi on the trip.
And accordingly, the U.S. data is reaccelerating. In European PMI show the opposite, with composite coming in much weaker, 48.6 versus 50.1 expected, contracting and making a new 17-month low. But two, with both input and output prices accelerating to multi-year highs and evidencing European stagflation and status as energy importers during this Iran conflict. I'm not going to go too much deeper into that because it's going to piss off the Euros that watch the show. But as such, the U.S. far more constructive growth story, yet paired against controlled inflation dynamics in large part thanks to energy independence, which won't require monetary tightening versus ROW. Looks rather Goldilocks, with USD assets still doing just fine. Despite the siren song narrative of dollarization continuing to pop up and get smashed relentlessly. I'm with him on this fucking shit more than he even knows. I've talked about this in this goddamn show. And
this isn't a trip by the Iranian negotiation team with the United States.
It's not just that either.
Saying now, when American media outlet.
I brought up to you in 1990s, late 1990s, we had
So furthermore, TASM News says when an American media outlet affiliated with Mossad reports this is important news, citing insider sources, and claims that Calabath won't be accompanying them is simply ridiculous.
Watch out for the drop here today. We could still get a big fat drop in here, so just a big flush. So I try to relate this so that you have a reference point, or like some kind of tie it into something. The Asian financial crisis took place in the late 90s, 97, 98, and the dollar went up, and the U.S. stock market went up. And traders then were like, wait a minute, the dollar's going up and the markets are going up. Why is that? And it was because there was nowhere to invest. And a bunch of money fled to the U.S. from Russia,
U.S. Air Force and Navy,
Southeast Asia,
35 fleet after record budget.
and they fled to the U.S. because the U.S. was doing the things it was supposed to fucking do to build out the internet. And due to that, the only safe place to be was in the United States. And so our markets continued to drive higher in that bubble. And there's a little bit of that going on right now, too. And not the exact same, but in the same fashion. Like it's quacking like a duck, walking like a duck. It might not be the same duck. And as such, I'll repeat it. The U.S. is far more constructive growth story, yet paired against controlled inflation dynamics in large part thanks to energy independence, which won't require monetary tightening. We're kind of like a Goldilocks, with USD assets still doing just fine, despite the siren song narrative of de-dollarization continuing to pop up and get smashed relentlessly. As such, U.S. Dollar rate vol collapses back down to near, quote, pre-Iran war levels, while U.S. equities nearly double up global peers month to date.
Iraqi officials are not holding any negotiations with the Americans in Islamabad.
And led by the mega cap tech AI cohort.
Tasnim News saying Iranian officials are not holding any negotiations with the Americans in Islamabad.
Again, I wish I was here yesterday, but my fucking goddamn fucking computer's not working. Same setup right here as yesterday. Just be wary here for a minute. Be careful here. They're trying to scare it again. They're trying to create the same shit as yesterday. As such, the U.S. dollar rate vol collapses back down to near pre-war levels, while U.S. equities nearly double up global peers month to date, and led by mega cap tech AI cohort, as a market once, quote, overhedged for left tail chaos, now chases into the right tail, with realized vol in SPX and NDX on up days nearly triple that of down days this month, as nobody owns enough of the market to capture the extent of the equities rally and is forced to grab back into upside optionality. So grind lower and crash up. When the world is overhedged for chaos and nobody owns the right tail, the market can't crash down. But instead, we perversely tend to crash up in a rally nobody owns enough of. April's realized vol on up days in SPX and NDX has been nearly triple that of down days. I've told you guys the past 2 weeks, the only thing I've said to you guys is I'm watching VIX 9 day in the background. I'm watching the vol as we trade. I don't always do that anymore. Sometimes I do, sometimes I don't. I used to do a lot of the 9-day stuff years ago, or something like it, but I don't do it anymore. But right now I am watching vol, and to his point here, April's realized vol on up days in SPX and NX have been nearly triple that of down days.
On the agenda, and Arachi's trip to Islamabad is not for negotiations with the Americans, but rather to discuss Iran's considerations about ending the war with the Pakistan side.
But also, too, I'd be remiss if I didn't mention the quote, end quote, short calls from some parts of the equities yield enhancement income, quote, overwrite, end quote, product universe.
Also officially stated that the purpose of these trips is close coordination with his partners on bilateral issues and consultations on regional developments.
Where ohm into these option selling strategies has continued to balloon in recent years, largely from boomers. John L., you're getting called out by Miguel Agat right now. Largely from boomers who now use them as the new fixed income. Binky, that's to you too. But with equity, I'm going to be that guy one of these days. But with equities price appreciation to boot, since bonds don't work as your hedge anymore, and month to date have seen a hilarious plus 9.2 billion inflow, plus 10.4 billion over the past 1 month. Not all of these products are structured the same way, of course, but a good chunk of the products across index and single name do indeed cover and roll. When the market rallies trades through their short call strikes as an additional source of squeeze flow in the market, which matters as we make fresh all-time highs. You guys ever hear John L. say, I'm just going to roll them higher, right? I'll just roll my short calls higher. That's what Miguel Agat is discussing right now. As it's intuitively been a rough stretch for call sellers, as seen below through a naive systematic performance replication lens, shown for illustrative purposes below. By the way, if you're in the Discord, I posted this letter for you in the market chat, so I'm not going to show it on the screen here. But look, at the end of the day, with chief proxy of the AI phenomenon being semis, chips, they are again zooming today. I am again iterating that there is a true fundamental input here, showing that this is more than just hype alone. And it is more than just hype alone. Powerful words here below from Nomura Tech Vol trader Pat Yu when describing the impact of the shocking Intel earnings print, yet again confirming the magnitude of the AI theme again driving broad equities behavior today. I haven't looked at it, but I know that it went up a bunch yesterday. It matched at 64, I think, three prior highs, which implies a squeeze above, but from those three prior highs, I think he even told Winky, like, just take your money and run. Don't get caught in the rollover and not capture the squeeze. Just take your money and get out. But it ended up squeezing. Intel broke out in a way from those three highs over the course of years and years and years and years. He says, this is Pat Yu. He says, is the INTC of 2026 going to be the NVDA GPU moment of 2023? Winky, you want to read this? It's hard to overstate how bullish last night's INTC earnings print was for the overall AI semi ecosystem. Since the AI boom first started, the market has been extremely focused on training clusters in NVIDIA's GPUs and the increased cost and compute spend driven by training frontier models. When you think about the increased bottlenecks that were, hold on here. I gotta make this bigger. I'm getting old. Well, not quite old. I'm gonna be getting those cool contacts now. As such, accordingly,
Israeli security officials to Channel 12 saying Washington imposed restrictions on Israel in certain areas in Lebanon days before the ceasefire.
hang tight here, guys. When you think about the increased bottlenecks we're witnessing within the last 3 months, it's been primarily power. Stocks are working again. GEV had a gangbusters print earlier this week. Most BTC miners, HPC stocks are all at all-time highs. Custom silicon chips, Jassy noting Amazon is going to externally sell their custom silicon Goog TPU partnership announcements with Marvel, A-Lab, CRDO, making all-time highs, and most importantly, CPU demand and CPU shortages. ARM investor day one a month ago, and most recently INTC earnings print last night. If we think about the workflows of how an end user would AI and how that would anatomically look like it, like if it were a human body, the brains would be the GPU. The brainstem nervous system would be the TPUs and ASICs, specialized hardwired circuits optimized for specific repetitive tasks. And network silicon, CRDO and MRVL, would be the nervous system, and most importantly, CPUs would be the central nervous system coordination and orchestration. In the last few months, it's been increasingly obvious that inference demand, driven by primarily agentic type workflow, as opposed to 2 or 3 years ago, where it was a chat box user interface. We've made comments on that too with CES, right? Some companies are still stuck in the chat box, and other companies are really implementing the next phases of AI. And it's glaring which companies are doing it and which companies are likely going to get wiped the fuck out when this bubble does pop. Like, I want to say something to you guys out there. If any of you looked or went to CES this year, it's just like the goddamn internet build out. It's just goddamn like it. Like 10% of the companies are ramping AI and machine learning and robotics and all of that, and like putting it through its paces as it continues to be rolled out and developed. And there are other companies that are doing things what some other companies did in the internet bubble. They're like, oh, they like the vanity of it. They do things or did things that are behind. You know, they're falling behind. You'll see like a refrigerator with ask ChatGPT on the front of it. That's not tech. But then you saw refrigerators with that you'd like. They would tell you what food to order. It would make food for you, like shit like that. Like using AI to actually prepare food for you or prepare your night meal, or saying it's Tuesday, you're gonna make this and this and this, and this machine over here is gonna help you cook it. Believe it or not, a one-pot machine. Seriously. So there's like a vast difference between what some of these companies are doing. In the last few months, it's been increasingly obvious that inference demand, driven primarily agentic type workflow, as opposed to 2 or 3 years ago, where it was a user chat or chat box user interface, is going to be what drives the intense demand for compute higher. The core, and that means that some of these companies are going to make that fucking jump, where some won't. Some are already making that goddamn jump, and companies will attempt to catch up in this AI build out as well. The corollary is that CPU demand is skyrocketing, as it's not just GPU, TPU, ASICs that are needed, but also CPUs to actually coordinate and orchestrate these tasks. The cadence of revenue of Anthropic's revenue growth demonstrates just that. INTC is up. I'm not going to read all this to you, but INTC is up 25%. AMD and ARM are up 11% and 8% respectively. And despite vols being a multi-year highs and this rally higher, these stocks are going to continue to work as this CPU bottleneck has been missed by generalists, and the market caps are so low relative to NVDA, Avgo, etc. I'm going to get you guys something cool here. I think. Hold on. I think I got something cool for you to look at, and just to look at. Where is this fucking thing? Nope, I swore again, didn't I? Here, I'm going to try to look for this website. And the reason I want to look at this website is because I don't know if I can find it. Fuck. I hope I didn't delete it. I might have deleted it. I don't think I needed it anymore. I'll look for it. Anyways, I went back and looked at the just take my word for it, okay? I went back and did a real deep dive on the internet build out. And it was fascinating because we had a lot of companies that were at the time the safe bets. The tech of the time was a safe bet. And then we had a lot of IPOs. We had a lot of companies that tried to chase the fire of the internet build out as well. And we had companies come and go, and we had a shift from companies that didn't catch up. And then when we got into, and it was fascinating because each year I was looking at the companies that printed, and they were different every year. It was like hitting whack-a-mole, trying to pick a company. And then at the end, I think that's what he's speaking to with this persistence in tech, is that at some point you are going to see, if we do the similar build out and this time around, you're going to see all of these companies, they just start ramping all at the same time toward, when we get to the top of the fucking bubble, you should see tech should go vertical, all of it. Fucking vertical. But the middle years were crazy. And we've been through a lot of that already. This whack-a-mole with stocks. Dude, this stock's kicking ass this year. And then it's a totally different stock next year. And I went through and looked at all the winners every year of the internet bubble. And it was fascinating to watch the cycling through. And then how at the end it became this big orchestra just coming together and going, woof, we're all going up right now. And, these fucking banks, these fucking hedge funds, they want to print. They want to fucking print. And everybody wants in. People got money. They're I want to get into some PE stuff and some VC stuff. I want to fucking drop 100K on this company and that company. Everybody gets swept up in all of this. And then companies get swept up into CES. Oh my God. Hey, Bob, why do we have fucking ChatGPT in the front of the goddamn refrigerator when that guy's over there making meals for people? You know what I mean? We got to catch up right now. And we got to start investing in this stuff right now, man. So the demand just starts ramping and ramping and ramping and ramping for all of this stuff. And this sounds like the same situation, similar enough. On top of this, TXN just had a 20% rally yesterday that pulled the other sleepy analog names up with it. ADI up 5.9%, ON up 10%, MCHP up 8%, almost exclusively driven by a full swing recovery in industrial segment, core biz, but most importantly, AI infrastructure growing 90%. TXN makes analog chips that manage power, regulate voltage, etc., which will scale nicely as infrastructure spend goes higher. So all in all, what's my point? I'm trying to make clear to folks that this rally goes far beyond just mechanical flows. After the initial put melt, Vanna impact, plus, delta short covering, HF slow netting back up, Mag 7 call chasing, spot up, vol up equals more delta, CTAs cover short signals and flip back long, vol scalers reallocation, as systematics unemotionally buy back equities, futures exposure, and heavily overweighted tech, AI, Mag 7 leadership, leveraged ETF space, sees the right tail. Saw Trump's escalate to de-escalate, ceasefire gamemanship, then light doomers, and scared money on fire.
Treasury Secretary Bessent tells the Wall Street Journal upcoming Trump-Xi summit is about stability.
But when it comes back to it, right now, it's the economy, stupid. And whether or not you like it, the AI story is a huge part of that. Here's the thing, though. The market is obviously repricing this as we speak, hence the chase. Because the U.S. remains the, quote, the cleanest dirty shirt, end quote, in the game. And you can see it in the past 1 month of global funds flows per EPFR data into USD assets, both equities and bonds, and are out of ROW. Excuse me. Out of ROW.
Several conversations with Treasury Secretary Bessent.
Leveraged ETF rebalancing is now greater or less than 86 billion over the past 1 month of buying. And it's all the concentric circles of tech semi-mag 7 overlap into index. So even though we have 30 bill or 20 or 23 or 25 bill to sell at the end of the month, they're not in it to fucking sell that other 50 billion unless we go below certain levels. They're still fucking long. They're still going to be long in the spring. We got to really start smashing through some levels here for that story to change. Yet all of this said, the inevitability of the supply shock in physical markets exists. And this is where we get into the bear side of things. Now listen to this closely if you're in sell side. Hence, too, does said resumption of global rate vol and CB hike repricing of an inflation disaster. The ugly truth is that the longer the embargo and the rolling ceasefires go, the more, one, we're burning through emergency inventory supply, disruption across energy and petrochems, the more likely we get to two, Iranian oil well shut-ins, which could then risk leading to three, more dangerous IRGC behavior, and I would also add in China, way more dangerous. These like when Trump tells, you guys know I'm not a goddamn Republican, and I'm not a MAGA at all. But when you see Trump's like giving them rope, I said this to you earlier today. I've said it to you last week. Like when they so flippantly says, "Oh, I'll give you 2 more weeks." There's because they know. They fucking know that whether Iran doesn't know or maybe they don't care, and that there's an end to this. And China, too, has an end to this. Now, their behavior could become more dangerous, or they bend the knee. Number 3, more dangerous IRGC, right? Risking attacks on GCC upstream, creating far more disruptive force majeure potentials than simply the SOH. And again, the aforementioned hiking into supply shock global CB behavior. Listen to this closely. As left tail risk then perversely builds further at the same time that people are being forced back into the market and chasing performance, chasing upside exposure. This is why a lot of convos I'm having are looking at long equities via long semis, but barbelled with long energy, the new 60-40, but also too against long convexity via VIX calls and long SPX put wing. So that's his bear thing here. And I think if you were to pull that apart here and top line it. Pull that apart and top line it here. What you want to do is look towards what I showed you, that chart from 2022, where you get the Fed tightening. And the pricing is not the same, of course, but it's the same idea. That you get the rip in the summertime, you come back down for the fall dump, and then you ramp again. So you get like the U.S. being more restrictive, and then as all this clears up, the market recovers and we go back into risk on again. Not risk on, but a more accommodative Fed and Treasury and everyone else out there. The shadow QE that we have in the markets, all the other bullshit. So Miguel got saying you still have to pay attention to the risk involved in this like left tail that's still brewing and we have not seen. The only issue with what Miguel is saying is there's a lot of misinformation, unknown information, intentionally. How bad is it actually, and when does it actually hit the tape? We know it's going to. It's just a matter of when, and how bad is it. And the other aspect to it, which is this isn't like an end of a business cycle, where that's forcing the shortages. The demand, I should say demand, not shortage, but demand destruction. The demand destruction today is coming from something that we already see that has nothing to do with the business cycle. And we're already creating demand, or we're intentionally creating our own demand destruction before we get there in terms of like selling, let's say I buy fertilizer for my crops and I'm just selling them to a higher bidder. I'd make my profit whether I grew the crops or not, or if it's in terms of, hey, we're all going to work 4 days a week, or we're going to do work from home again, or we're going to end up doing work from home 4-day work weeks. Oh, hey, I'm going to get you free bus passes for everybody. We don't want you driving your cars. We want you to get on the bus or the train or whatever. And you're already seeing that austerity in Asia and Australia and Southeast Asia right now. So, Miguel Agot's note, you have to still be aware, and as we squeeze, he's saying we're going to squeeze higher, and you want to get long on tech, and if we're in the final phases of some kind of a bubble, and that would mean what? If we're in, listen to me closely here. Come around the TV. Swivel your chair around and look at the wall. There is a moment, and I don't know when it comes, but we're closer than farther away from it, where you're in the last year or two of the bubble. The bubble has not popped. I've told you that again and again and again and again. If you look back at the last leg of the internet bubble, it went fucking vertical. And there were big blow-offs along the way. A couple times a year, you'd get big corrections. But you'd stay long and add. And if you stayed exposed to that bubble, the market should at some point, all boats should go fucking moon. All those pullbacks we're supposed to have. You know, can we go down and go back down to the bottom down there? All that kind of shit. We can go down a big bunch, but they're going to squeeze our balls off as we do it. So where you're looking for things like this to happen, I think I've repeated this. There you go. Give it the big green squeeze right there. Watch this right here. So when you have like something bad happens and you're expecting us, oh, we squeezed here, we're just trying to get us some volatility, we're going to go back down there and do this double correction. That's not what's going to happen. It's going to be like this, where you go down, you rip. You come back down, you rip. You come back down, you rip higher. And I think that's the takeaway from, what am I doing right now? Can I stop doing that? Just, what does it do? Is it, somehow that my thing's stuck. Let's put that over there. Yeah, get up there and fucking smash them right into the fucking bell to the upside. Go vertical right into the fucking close. You tick that one right there. I think this is the halfback trade. This is the quarterback trade right here. I think that McGilligot's point to you is you should start looking back in like 98, 97, 98, 99, 2000. And if you, I'll try to find this website for you because the indexes did their thing. And then alongside it, companies like INTC back then, not like what INTC's positioning now versus companies that were tech back then, they went fucking vertical. Like they all went vertical. Like the whole fucking market, like where it was like, where you'd have like rotations. Oh yeah, we're gonna rip that one. Now it's coming down. Rip that one. Now it's coming down. All in the same time period. Like this is a whole. Like we're rotating from stock to stock. At some point, it ain't like that. It's everything is up at the same time. All of it. All boats get raised. And there's two things to know about this. One is there's two things to know. The first one would be as everything starts crashing up, as he's saying, as that becomes more apparent, it will be all boats up. The second thing to remember is when we do come to the top of the market in the bubble and we start to roll, every single one of those stocks to go, not zero, but they will all come down together, like all of them. And there will be a lot of bankruptcies and mergers and selling out the last possible one with the best fucking price to some sucker, like Pets.com. I think that deal was like 1.7 billion or something. It might have been less, but and then it was worthless at some point. And bankruptcy soon followed, and that should happen as well. And there's two takeaways here: run up the bubble, stay long, keep adding on any pullbacks. I think I've said this to you a million times. You should see big vol blow-offs. I think that's what he's talking to. And I think velocity is showing that as well. You'll actually see divergence in velocity and price of the market going up on higher frames at some point. And you'll see these vol blow-offs and velocity blow-offs too. That vol blow-off is the same thing as a velocity blow-off to allow more squeezing higher and higher and higher and higher. And then just remember that when we come to the top of the bubble, listen closely. The monthly trigger should be right around where price is and we flatten out. It shouldn't be something where there's a big stretch between monthly trigger and price. They should be fairly close. And you should see the market flattening out. You should have already seen everything go up at the same time. So you already see everything going up. You see the market start flattening out. You see the monthly chasing up to price. And as soon as that price rolls and crosses over that monthly, we're done. And when we're done there, and I'll be here on this show to tell you, we're rolling over the monthly trigger, we're going to fucking crash. I'm going to tell you the day that it happens. I'll be on the show to tell you when it happens. Not they tell you 20 fucking times it's happening. When it happens, I will tell you. The day that it happens. With 100% certainty. That when it's time to go real risk off, we'll know. This is when you exit the market completely. And when we do that, you're going to get another opportunity to buy the fallout You're going to be able to come in and you're going to get all these cool companies for pennies on the dollar. And you're going to be able to run it up again for another 10 fucking years. It will go through like a 3 to 5 year period of that blow off. And you're going to be buying all of those dips with me. We're going to buy them together. We will be buying all those tech companies, all those new tech companies that make it for pennies, not pennies, but probably dollars. You'll see those companies come back down to the real world, 5, 10, 15 bucks, whatever they are. And we'll long those again. And we will retire on those. We'll be in our 70s and 80s, hopefully. Filthy fucking rich. Filthy. Filthy. And you can pass it along to your kids if you have them. Or you can just get a bunch of hookers and blow and kill yourself at 80 years old, whatever your tastes are. But his warning to you is that we're likely in that stage. Likely in that stage of the market. Now, that lasts, like, it's either 1, 2, or 3 years, somewhere in there. And we will take hits. If you want any more information on that letter, I did post it in the Discord from McGilligot. Sorry, I'm chatting with somebody in DMs right now. Chatting with Winky right now. He's helping me with my I'm not as smart as Winky when it comes to computing, so I rely upon people that are smarter than me. I know when to reach out for help. When things are above my pay grade when it comes to compute. Yeah, Winky, I paid for the warranty too. They told me bring that shit down, they'll give me a brand new one. I mean, theoretically, you guys pay for all this shit. I mean, you guys are the ones that pay for this, like all this compute shit, all this stuff right here. You guys pay for all this stuff. That's where all of your money goes to, like people working. I pay people here, believe it or not, and then all the things that we pay for, the services and all that kind of stuff that you guys get to digest. All that shit costs money. The data costs money. It's stupid expensive. I got the warranty for us. Fuck yeah. I pay for that goddamn warranty for that goddamn. I paid for warranties for all the shit that we get, or anything that's expensive, pricey. I just want one more. What was the high on that? 716723. We're fairly fucking close to the top, boys. I mean, that's fucking I wanted us to trade 7180. 7167 is pretty goddamn close. Pretty goddamn close to a top. And there might be one more rip. But it's pretty fucking close. Dude, are these guys fucking watching my show or something? Why are they coming down here? Oh, yeah, there goes this half-hour trigger coming on up, coming on up. I mean, as far as I'm concerned, we hit the target. I mean, if the target is 7175, 7180, and we just hit 716723, that's close enough. Fucking close enough. It's pretty goddamn good. I'll take the squeeze into the close, though. If we can squeeze this up into the close and just like that last little bit, like right to the bitter fucking end of 415 would be nice. I'm gonna have to put more hedges on, close those calls, and buy more fucking cheap ass puts. They add some 90s in there now. I got like 70s on. I got fucking 70s, 80s. I don't have any 90s right now. I'll have to add 90s if we go up anymore. If we go up into this right here, I'm gonna add some 90s for the 8th. What do they cost right now? The 8th. We should look at this. So the 8th, I probably should set this up so that if we do squeeze, I'm like not fucking screaming bloody murder and not getting the goddamn puts. Hold on here. What are 790s? Jesus Christ. I guess I'm selling calls instead. What in the fuck are you guys doing out there? You guys are savages. A 790 put. This can't be fucking correct. We can't go down. I should have looked. I haven't looked at the 8th chain at all. A 790 fucking put. 14 days from today is $77.74. Get the fuck out of here. We could probably trade 730. Are you fucking lunatic? Are you guys lunatics? 77 goddamn dollars. 14 days away. Fucking lunatics. Oh no, sorry, I'm in the wrong one. I said 790. I meant 680. I mean 690. I'm like, what the fuck is that? Yeah, they're nice and cheap. They're $2.59. I'm like, that can't be real. I'm like, there's no fucking way. 690, 259. Still expensive. I want them to be at fucking 70 cents or $1. So I want you to open up your option chain. Go to 690p for May 8th, and I want you to watch that. I want you to watch that fucking 690 as we come into the close today. It's 415. If we start squeezing up and up and up and up and up into the close without a truce of some kind. Keep an eye on this group right here, and you should be able to afford some of those with the winnings from the calls for Monday. If we can get the close and the high, you can probably scoop up some of those for cheap, for like $1. I'm like, $77. The fuck is that? What are you guys doing out there? I was like, you guys were like max bidding. Like, I haven't seen numbers like that since fucking COVID. I used to see those numbers during COVID. It was fucking crazy. Where I was buying like $20,000, $30,000 puts. It was fucking insano. Didn't you guys remember that shit? Like you couldn't even buy puts. Puts were like they would like go to like $60,000 for one. $30,000 for one goddamn put. It was fucking stupid. It got so bad with puts, like it was fucking insanity. You were just pricing people out of puts. People were buying like the most out of the money shit to stay relevant. That sounds way more reasonable. $2.58. It sounds a little overpriced. It needs to be about $1. Somewhere in there, buck. It's at $2.59 right now. $25,000 for a 100-pack. I'd like to see I'd like to see 10 grand. I can't believe the OI is only at 9,000. What is 700 at right now? The OI on that one is 17,778. What are 710s at right now? There's not a lot of 715. Not a lot of OI on those. 715's only got 1100. Let me look down below. I got puts down below. Yeah, see, 680, there's 26,000. Those are going to burn. No, maybe, no, what? Dude, am I the only one fucking holding 670s? Surprised that there's not as much open interest there. Let me look at the first. $28,000 on 690p for the first. I think that's too early. The market's saying that we'll be at 690 before we get to the 8th. Or the market thinks we'll be there before the 8th. We'll be there by the 1st. The market's fucking hedged for like more doom faster. I wonder if it's because they're trying to. Maybe they're not trying to. Maybe it's not directional. It's probably just trying to capture the vol, maybe for the spot up and then the roll for FOMC, maybe in month end. Maybe they're not in it for the price; they're in it for the demand. $680 for May 5th has 62,000 OI. Okay, so this seems more rational. 5-1, there's 15,000 on 670p. Those are going to burn. 680 is going to burn. I bet with just getting I bet if you just get the May 8th, they'll get a premium kick from the OI rolling into those. I want the 8th. I bet all those puts are going to get rolled deeper or farther out. I don't think they're going to get it on the first. I don't think they're going to get I don't think they're going to get 690 on the first. I think it's going to take like at least a week, at least into the. Let me just do this really quick. I think that the biggest. Hold on here. Oh, shit. Oopsie. What just happened? Hang tighter, guys. Sorry about that. Is that all back up again?
Voice news disconnected.
I'm losing the show here. Did I already lose the show? Are we still live? Okay, good. Thanks. I thought I was losing the show. You know what? I'm like I'm like the I'm like an abuse victim here.
Friday. Dude, you need a dream break.
I'm like fucking flinching, like we gotta lose the fucking show. Like one last fuck you into the end of the week. Like, I think I am losing the show though. If I do lose the show, a couple notes here into the close here. Let's chat about the. Is it 2:30 yet? I gotta wait a little bit. We gotta wait until 3. So I'll hold off on this to give you an expectation for the weekend. Do you want me to tell you what it is? Right now, I can tell you what I think it's going to be. It's right where that line is right there. It's up. Even if we flush, it's going to be up over the weekend. We're going to trade 720 on SPY. If I had to guess. There is something else up here. I showed this to you on Monday, but I haven't shown it. Is it still there? Nope. It's not still there. There's a higher tick here. I'll have to look at it here. Let me see if I can show it to you on this one. Does that trade the trigger up there? I'm just gonna SPY and show it. Dude, that Bork. I don't know what the fuck you did, man, but the pulling data shit is baller now. I don't know if you're watching Bork out there, if you're out there, Borky. The whatever you did in the back end of the gamma visualizer, it's like almost instantaneous pulling data, brother. It's gangster. Yeah, we hit so a couple things here. Let's go top right. Net gamma's got the top as 715, which we just traded. We traded 714.46. SPY net gamma's got the prevailing bar is 715, but there's another one above it. So let me just show you this. So this is the net gamma visualizer. Now, don't get crazy out there. Don't get all like John L's gonna get mad at me because you will be the source of supply in this. But I want to show you something here. So we just traded. This is net gamma 715. That's what we just traded within 50 cents. So theoretically we just bounced right here, just now. Now, if there's a source of news, so you're going to automatically expect us to reject that, right? Or hit it and fuck around on it.
Seeing here from Amiri Deal One saying Qatar Emir
But
discusses
you know,
and Tehran ceasefire.
Voice news disconnected.
but you know for a fact that if we get above it and start building Poop Island, what do they do when we come in at the end of a month if we're above it? They start rolling higher, right? So what you end up getting for your, so this is Gex, this is net Gex, right? What you end up doing is you get, what did Charlie say to you? You sell calls higher, right? So what you'll see is like this bar go up theoretically, that bar goes up, this bar goes up. These get erased as we come in a month end. Now you're not going to hit those bars. If this happens, you won't actually hit them. What they'll do is we'll break above it. An option seller like John L will sell you calls, and then we'll roll down. So that next target is 720 and 725. So what you're going to do is you're going, like, if we're able to get above 715 as we come into option expiry, you'll get a tease of, oh my God, we're going to trade 720, 725, 730. You'll get call sellers that'll dangle in front of your face. Let me go back here so you can see this. So we're in the process right now, right at 715, heading into the end of an expiry, to get you to roll your calls higher. So you're going to say to yourself, hey, we're going to go trade 730, bro. I'm going to buy 720 Cs, and I'm going to buy 730 C, 725 Cs, and 730 Cs. And what's really going to happen is you're likely going to reject 720. We won't ever get over 720. So look at it from that perspective. We're trading 715 right now. We get up near 720, and that's where the real roll is. So here's 714, here's 715, there's 717, 18, okay? If we get up here anywhere near that 720, you're going to likely see guys like Miguel got said, the boomers are going to want to roll their calls higher into this new month. They'll be selling you 730s, 725, 720s, and you're going to think we're going there. They're going to create the FOMO for that, and they're going to make money off of you. At least into, I think it's the 8th. I think it could be even later. I think the month of May could be a down month. Very similar to 2022, where it takes like to the end of the month of May to lift a finger up. It's possible. And that could be that knock on rein the market in until we get into the fall to address this stuff. But be aware that the 7,200 on SPX could be higher. So I think that would translate into like 7,250, 7,300, and 7,30 or 7,350. They'll attempt to sell those calls for the month of May for you. or maybe even higher. You might see that gamma map for because of May, June, July being bull months historically. They might even roll them even higher than there. So we'll check and see in the beginning of the month, but just be aware that like 7:15, you start. This is a build out right here, right? You see it? Building Poop Island right now. To trade all this up here, and you're going to get excited when you see that. If you see that move up in here into 7:15, you're going to get really super excited. You're going to want to like, oh my god, the bull market's never going to end, all that kind of stuff, and they're going to sell you those calls into the month and into month end. I'd probably just give a SPY target right now. 7:17.78 before the roll. If we can go up here today into the close, I would fucking love to goddamn sell some goddamn calls or buy some puts, one or the other. I'd love to sell 730s. I'd like to sell 730s for like, I don't know, like middle of the month or something. Middle of May. It'd be a great fucking, you get the boost of everybody buying them. Or maybe even 720s. I'd even fucking sell, 720s would be nice to sell for middle of May. No, maybe more time on those. I probably want to give like at least 30 days. I don't know if we can get up there. But if we can, be dope. Even cheap puts would be fucking dope up there. I'm gonna take a quick break here. I don't think we get it. If we make this move up, I don't think we're gonna get it till end of the day. So, maybe like 15 minutes or so. I'm gonna come back for 3 p.m. and for sour hour. Be afraid of not afraid, but be aware of a liquidation break, some kind of a not quite plunge, but just trying to sweep early bulls in here. I don't know if we see 715 or that 717 today. I'm assuming it's the market's waiting for a catalyst to do it. There's been noise on the news over here on Financial Juice. Qatar mayor discusses Washington and Tehran's ceasefire agreement with Trump. U.S. and EU signed critical minerals plan to push to loosen China's grip on key materials. Good job, Europe.
According to Axios, saying Iran state news agency RNA reports at all the movement that there is no planned meeting between Arachi and Trump's envoy Witkoff and Kushner. So again, coming from Axios, citing Iran state news agency RNI, reporting that at the moment there is no planned meeting between Arachi.
Let me just check the 30 really quick.
Witkoff and Kushner.
It's a 30 there and a 30 here. Just check this for a sweep here. This is a 1 hour right here. Let me just check this again really quick. All right, hold on. We're just going to delete all this shit. We'll just do it together right now. Fucking got shit written everywhere. It's a beautiful fucking candle right there. We needed that goddamn candle.
Sanctions on Chinese teapot refinery.
This candle is fucking beautiful right here. Let's go over there together. We'll look at this together. I was going to take a break, but I'm not. We're just going to lay this out for the end of the day, and then I'll give you the expectations for the weekend here in a minute. On a day, this is beautiful. I just want to show it right now. It's absolutely fucking stunning. Okay, so the week. Let's look at the week really quick. That's beautiful right there. This is what you want. And if you're a bull,
futures settle at $94.40.
You want to be closing above right here.
45 cents or one spot.
Let's draw that in.
NYMEX diesel May futures settle at around $3.88.
You want to close above this right here. Is the prior week
at around $3.46 a gallon.
And you without a doubt want to close above this one right here. So on a weekly basis, you want to be above 712.44. And the reason why you want that is you want that big, nice, fat green close for the week, and you want to be able to come back down here and sweep to go higher again. Okay, for next week into May 1st, if you're a bull, or the close today we do it. You go up here and pop that up there, and then we're out of here, right? We're out, come back down, one or the other. Time is not on our side right now. We always save this shit for the last possible moments. So we just want to pay attention to these things right here. They're very important. And you want to see what this weekly close is. On a daily basis, we're going to look at this. And you can see the market needs to hold on to this for the week in general. This is Friday, Thursday, Wednesday, Tuesday, Monday, right? And you see right here, this is giving up the week right here. You see that green line right there? You don't want to be giving that up. No bueno there, right? On a 4-hour basis, let's do this closely. I'm not going to give him expectations here except for the day, for the rest of today, but I just don't want you to see that. And I want you to see this too. This is important to see because we keep putting these in. I had these white lines in the chart earlier when I said we need to go down here, and you can see this right here. This is Friday right here. They unlocked right here. They unlocked right here. They unlocked this one, and this one, and that one. There's like 4 of them, but they have yet to unlock this one. And they're telling you that we can, with unlocking these, that we can go down here. If we unlock this one, then we can go down big time. So you definitely do not want to lose for like when the market is done. If the market is done right now, if that's the top, we just hit 715. Key level right here. That's 706.42. And this opens up a fucking huge door to 690 at least, if not even lower. It opens the door to this daily trigger down here. Key level right here, 706.62. We've already taken out these, which leaves the door open to trading in here, but not so much. Excuse me. To trade this. But if we trade down here, bing, bing, opening up, rejecting, downside, we're out of here. All right, we don't need any of these right here. These we already hit these. We don't need to know that anymore. We need to know this right here. This is where the basis. All those white lines are underneath this stuff. That makes sense to me. Like all those white lines are in here. Let me check one more thing. We've already erased these down here, so we're good. This is all open to trade. The key level for more uppies is right here. You can see you can even see it with just the triggers. That's why I love the fucking triggers. It's kind of ICT shit. That's all it all is. Like Elliott Wave is, that's all the same shit. It's just how you get there. Triggers do the math for you already, but you can already see right here where the half an hour is up here and the hourly is parked just above. And the reason they're telling you that is because if we lose this right here, all that's open. And we've already unlocked the other white lines over here that I showed you. So this is easy right here. That is easy. And the other scary part is that this key level also opens up a trap for bulls to go down deeper. So that's pretty bad. So basically right now, the bulls have this right here. This is what the bulls have right here. That's what they got. That's about it. And remember, these two white lines right here, these two right here are the prior weeks. So the bulls want to stay above this for next week into the close. They don't have to go up anymore, but they want to stay above these two lines right here for next week. Anyways, on an hour or on a 1 minute basis, let's switch over here. And I'll give you the expectations. You already know them, right? I already showed you what they were. It's right here. So we already had that one there, right? And then I had it coming down. And then I've got this one right here. Yeah, this going up into the close. But there's no requirement that we do this, but right up in there. I'm going to leave it till the actual close of the market, but that that half an hour trigger is coming up to the 1 hour. This one's parked right here, which it needs to be parked right here in the close.
According to Axios, Trump discussed Iran's ceasefire and efforts to reach a deal with Qatar's Sheikh Tasnim Al Thani today, and Trump talked Hormuz maritime security and supply chains.
Yeah, right there. Could put this right here too. I'm willing to give a little bit of a I think we can go up now, but this does not need to take place. I just want to leave this for a flush moment as this half hour trigger comes up. I don't think we're going down here. I think we're just going to ramp it, but I want to leave it because that's where that half hour is right there. Roughly right in there. I'll be right back with you guys. Happy Friday, by the way. Leave that right there for you. I'll give you like 5-10 minutes, just a quick break, and I'll be right back with you guys. We'll talk about the rest of we'll talk about over the weekend into Monday. News Squawkers on 2. I'll be right back. I want to see the fucking flush in here. I really do. I'll be honest with you. I want to see the goddamn flush. I mean, not a full flush, but like right there, maybe. And then Rampo-Rama. That's really what I want to see. I want to see like dun, 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 fade, 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 and then whipsaw that shit up.
Iran's Foreign Minister Araghchi has arrived in Islamabad to hold talks with the Pakistan officials. That's according to the Tehran Times. So, according to ABC, US and Iran delegations to meet with Pakistani mediators, quoting in a Pakistani official. Furthermore, info saying US and Irani delegations will have separate meetings with Pakistani officials this weekend, a senior Pakistani government told ABC. And if those meetings go well, the US and Iranian delegations would then meet directly on Sunday. The official said the Iranian delegation has arrived in Pakistan and the US delegation is expected to arrive Saturday evening local time. So, seeing just further confirmation from Pakistan Foreign Ministry saying an Iranian delegation headed by Foreign Minister Araghchi arrived in Islamabad today. Trump says Iran plans to make an offer aimed at resolving US demands. Trump tells US officials negotiating with Iran are dealing with the people who are in charge now. And Trump tells sources that they want to talk and see if they can make a deal. Trump says he plans to discuss various issues with King Charles next week, including Iran, NATO, and digital services tax. Furthermore, from Pakistan Foreign Ministry saying Iranian Foreign Minister will hold meetings with Pakistan's senior leadership to discuss latest regional developments and ongoing efforts for regional peace and stability. Brent crude futures settle at $105.33 a barrel, up 26 cents or 0.25%.
Just a note here that we're getting the Trump pump from. I'm going to read a few things off. You didn't hear it earlier. Huh? Oh my God. Trump adds firing squads. I shit you not. Trump's Justice Department adds firing squads for federal executions. I mean, I don't think it's a bad idea. I'd rather be shot, I think, than go to a chair or anything else like that. I mean, I think I would, if I was going to be put to execution, I'd probably want, I don't know, drugs, but not the drugs they currently do, because they fucked that whole thing up. I don't know why I'm talking about. I don't know why I'm talking about execution, but if they fuck up chemicals so much, I'd rather be shot probably if there was going to be put to death. It shouldn't be taught. That's some macabre shit. We also have Iran's FM Aragachi arrives in Islamabad to hold talks with Pakistani officials. Trump spoke with Qatar's Sheikh Tamim Al Thani today, discussed Iran's ceasefire efforts to reach a deal, per Axios. Trump pump coming in right now. Trump, Iran plans to make an offer aimed at resolving U.S. demands. U.S. officials negotiating. Trump also goes on to say U.S. officials negotiating with Iran are dealing with the people who are in charge now. I winked at you, by the way. Iran wants to talk and see if they can make a deal. That's most of it. The U.S. also released fresh Iran-related sanctions. You know, and this is the part that I don't talk about, which is at some point, I think even China is going to push Iran to make a deal, some kind of deal. The timeline is not for the U.S. The timeline is for China and Iran. There's some other weird shit here too, like ceasefire talks on again, off again. Reading a lot of that. A lot of misinformation, double speak coming out right now. I got a new security update from my phone. This just dropped a few minutes ago saying Iran has made no request for an in-person meeting with the U.S. Per Tasman.
A bit further, more info from Tasnim saying there's no decision from Iran to engage in talks with the US.
We're grinding higher right now into power hour. Note that zero date pin is 7:15 right here. So an in the money pin for the close today on Friday is right here. It's like a magnet. About to put in a new all-time high, trying to trade up into 7175, 7150 on SPX. You can still chase it. It's going to keep going. It's going to start. It's going to park right here. It's going to go right up into this, into the close. Theoretically back tested that green line that I had here before on R1. You're going to get another chance too. There's a prior high right here. So it's going to come up here, smash me, just draw it in for you. Want to jump on it? It can show you what it'll look like. I got you. Hold on here. It's going to look just like that right there. It should get in the money a little bit, like 30 cents or so. It should blast right through it comfortably. Just look for a back test on this 1 minute trigger right here. Jump on the train. This could actually be more like this. Right there. Could grind in here for a few minutes before the rip higher. Just watch out of a grind in here. You could grind. I'll just, if you want to jump in, I'll let you know where to jump in. How about that?
For denying
Just say,
the health
go
of
long.
Geely to bring China tech to the US.
But there could be like this just grinding in here.
The Chinese car maker on US still.
They'll try to sneak it up right at the end. Here, I'll grab some 0 dates with you. Hold on. I got these puts open for the close for like I want to be able to close calls, get puts if we go high enough into 415. I'm gonna switch here to 0 dates. $7.15s. What are those at right now? 17 cents. That's a good trade right there, actually. And they're cheap as fuck. I fucking hate, like, normally on Fridays, I flinch because, like, 9 out of 10 Fridays on up, they burn us into the last few minutes. Very common on a Friday. Like, this doesn't need to go up. It kind of does. But they can save this shit. We're not at month end yet. That's the other thing you got to remember. Like, we should talk about this right now. So just a note here. Let's talk about this right now. If I see the buy, I'll let you know. We're not quite at the end of the month yet, so you don't have like you have a vol unwind for each month and each quarter. You have a potential volatility unwind on Vixpiration, then OPEX, and you have another one at the end of the month, month end, and where the market is freer to move, and then you have competing sometimes or same flows that can send us up or down or whatever. The thing you need to realize into not so much today, but next week, we have earlier this week, I thought they had moved the FOMC into this upcoming week, but it is still on the 29th, I believe. There was rumors of the FOMC emergency meeting being moved like a week or two ago, and so when I was reading this, I'm like fucking Anchorman sometimes, where I'm just reading what's in front of me, and so I had highlighted 3 stars instead of 1 star, but we're gonna do 3 star right now again, just to give the top events for next week. So when we come into, I want you to think about this right now. Next week we have 0 3-star news, so important econ data. We get nothing on Monday or Tuesday. The first econ data that's big is the FOMC meeting, and I'm going to tell you right now. I'll look right now. I'll just double check again here, but let me just check the 3-month really quick. It's 3-month yield. Let's check this 3-month really quick. I'm actually surprised that it's rolling down right now. I'm fairly surprised. It's down at 3.682. I'm impressed. It actually looks pretty fucking bearish here, like they're going to give us a cut. I don't think you're going to get cut. Don't take this long. I'll let you know. I'll tell you exactly when to take the long. I haven't bought it yet, so just chill. But the greater point here is we still have another goddamn week. like we have all next week. And then it's a short week too, which is even funkier. So like you could make an argument here that we're going up into Wednesday open, 29th, something like that. So there's more room to go up and time to spare is my point. And there's no events next week, so we're at headline risk. We have no big events. Econ data, the market will feed off of anything. So number one, right away, I would say the market doesn't need to go up here into the close. Okay. If it does, I would expect to go up around 350 in the afternoon. And the next thing I would say to you would be, theoretically, if you get headline upside vol and downside vol potential into Tuesday of next week. Now Wednesday though, we start building in real volatility. You should see puts increase in value as we get closer to Wednesday's FOMC. You got to remember, like, unrealized volatility, and not some of you guys already know this, but like unrealized and realized volatility are two different things. You should see like a rolling of puts farther out in time to the 8th. There are no puts on the 8th right now. And even if the market's going up, you'll see those puts increase in value as we get closer to next Wednesday's FOMC meeting. Now, this 3-month yield here is saying that the Fed is not going to be as right now it's saying that the Fed's not going to be as hawkish at this Fed meeting. If you know my expectations in the Fed meeting, you're going to get a hawkish tone from the Fed at minimum. And at minimum, you should expect that hawkish tone. We are monitoring developments in the Middle East, and I would assume that you could catch a break from the Fed if we get a no, I don't want to say that. But I wouldn't expect a cut is my point. You're either going to get, like, your most probable is hawkish tone from the Fed, wait and see if nothing changes. Or maybe even a cut or a hike, 25 basis point hike on Wednesday. Now, the initial thing is you're going to get the unrealized volatility into that decision, and then you're going to get realized volatility by getting the hike. So that should take us into like, let's call that like 7,000, maybe 690, 190 or something like that. We should bounce off the 690, and then but that will not be enough recovery for the weekend. So you get into like Friday, right? The market should be like slammed and pinned down, and then when we get into the end of month flows, that's the 1st through the 8th, theoretically, you should see another knee-jerk leg down into the 8th of May, let's call it. Now, let's talk about that briefly, because it could be something where we're touch and go. Slam down 690, we're up and out of here. It could be something else where we drag for the month of May, believe it or not. Like drag sideways, and then they peel it all off for the end of May and June, and then a print for mid-July. You guys following this? I want you to watch this program again. Like, this is part of the program. I want you to watch this because it's important shit. So if we get pinned in, so everybody's like pumped at 690 or 685, and they're like, woo! Did I say that right? Yeah, 685, 690. And then you end up getting fucking hemmed in for like a month. They torch everything that you've done. And that's the same people. They're selling you the calls at 720, 730, 725. And that hand, it doesn't come off the market until we're getting close to the end of May. So you might not see like a return to 720, 715, 720, 725 till the end of May. Like end of May. That's like best case. Worst case scenario, we get hemmed in maybe a little bit lower, a little bit deeper than expected. And your upside targets for summer are hemmed in, like maybe 730 by July. We're at 715 right now. So you're talking many fucking months here to get, not many, but enough that it's going to be a pain in the fucking ass with a lot of bullshit. So I want you to just start thinking about like either today, putting a hedge on the bell, or thinking about the idea that you could have big volatility heading into early week next week, up and down. So you're like trying to grab a high to sell, or if we lose the hourly trigger on Monday morning, you know, put in a second low and we're starting to roll, or at least a fade sideways and down, slow grind into the rate decision, and things don't get better thereafter. When we get into Wednesday's rate decision, we get a bunch of other wonky shit too. We get on Thursday core PCE, we get GDP, we get personal income, personal spending. On Friday, we get ISM manufacturing. So I want you to think about, like, there's more volatility after, and then you get more volatility when you get into Tuesday the 5th, right? And I said the 8th, right? Just the hand coming off. You've got on Tuesday the 8th, or excuse, yeah, Tuesday the 5th, you get ISM services, JOLTS job openings. You know that ain't going to look good. That ain't going to look good. We don't have unemployment bad right now, but guess what we get? We get NFP on Friday the 8th. And the zeitgeist is that, you know, the world is imploding, employment is imploding, and that we should be going down. Like, one of these programs that were on the YouTube yesterday, my fucking popped up my feed. I listened to this other woman, and she was talking about, she's not a stock market participant, but she's like, she's got like 3 million followers. I try to like listen to, I listen to different people for different reasons. So I try to find out what CNN and Fox News is telling everybody. And then I try to figure out what like the normies get. Like what is Joe Rogan talking about? That kind of shit, bros fair. Because they have very low information, and they're not telling you the truth most of the time. It's very inaccurate. And this one lady was like, the market should collapse because of no jobs. What they're not telling you is that there's a window, just like inflation, where companies are laying people off and they're making higher profits. So there's a window even in inflation and in no job creation, even though there's no unemployment, major unemployment, where companies are going to be like, we're not in a business cycle of it ending right now. We're at the tail end of a business cycle. So it's this time period where cutting jobs is good for the economy, for earnings, for corporations. So an example would be, if there's only 10 companies in the United States, and we're cutting, there's like layoffs that are, or not rehiring. There's like a window where corporate profits are mooning. So we got to price that in first until enough jobs get lost that it is a problem with price that in. At any rate, on Friday, though, we do have an NFP vol as well next. That's on the 8th. And then listen to this crazy shit. On the 12th, we get an inflation report. And you know that whether that inflation is showing up yet in that print or not, surrounding it, the unrealized volatility, whether we get that or not, you're going to get all the newspapers, all the fucking social media assholes, all the fucking, even WAPO and New York Times and CNBC, they're going to whistle doom to you into that inflation print. Okay. Now, I don't know if it's going to be good or bad. We won't see that realized volatility until we get to that print, but just be aware that, like, we have events, volatile events, like stacked deep into mid-month. We get PPI on the 13th. So we got a fuck ton of data coming out into the next few weeks here. And even if that data is good, you will still see volatility priced into the potential badness into those events. So just be aware of that as we move forward here. Now, I think there's still room to rip higher, either into this close or over the weekend, like wake up on Monday in a high. but then you might not have a buyer there for you. So, like, let's say you get calls right now for Monday, they should be in the form of a spread. If you're going to sell calls, you need to make them higher. If they roll us up, you got to remember that if we hit like 715 and 720, we go above 715 and 720, near 720, they're going to ramp this fucker up there. They'll chase it as they roll. Does that make sense? You'll get like a big rip up as calls are rolled higher. That means a call seller is up there trying to sell you calls, and a call buyer, a sucker, is there trying to buy calls on whatever news comes over the weekend. I'm going to predict for you right now that you're going to get some kind of positive news on Monday. You're going to wake up to some kind of a truce being lied to you, and then it'll fall apart on Monday morning. That's what I think. Or Monday afternoon, maybe Tuesday. But I do think we're going up over the weekend, either here now or over the weekend. I wouldn't pay you the calls. If I was a dealer, I would try to like pin us in and then either run it up in here at the last possible moment, or on this line right here, which goes up into Monday open. But I do think that you're going to see that rip higher. So if you're either, this looks kind of productive here. Let's watch this closely. So you could either do like a call spread in the money, if we just sit here, do nothing, and a call spread would be better because you have to worry about a buyer being there on Monday. You'll catch the price on the put end on Monday. So just be aware of that, okay? And if you want to be flat over the weekend, you can, but I really want to sell like higher on a roll of calls. So just be aware of that heading into this weekend, and be aware of the data that's coming out next week. And then we start rolling into some big tech earnings the next couple weeks. It gets extremely busy for big tech, and you're going to see, hopefully, that what you'll see is that volatility that we're pricing in. You're going to see some lows from that volatility being priced in and some highs from those tech earnings. So you'll see like S&P 500 on highs, probably in closes and opens. Like you'll see like a spike at like 4.15, and you should be buying puts there, or selling calls on those spikes up on good earnings, because they're going to take the money and run. I assure you, they're going to take the money and run off all those tech earnings. So just be like, heading into next week, heading into next week or from today's close into next week, next 2 weeks, be looking for trips to the rolling of calls to either sell calls or buy puts or whatever fuck it is you want to do. And then your window for doing that, though, will likely begin to end as we get closer to FOMC and the new month and the new flows that are working against you. Just remember something on this, too. There are moments where you don't fight other participants in the market, and this will be one of them, where we should be going up, bro. We should be going up, but you've got flows, sell flows from pension rebalancing, from CTAs that are fighting you all along the way. So you should see any spike up get sold into. It'd be an opportunity to sell. And if you're a bull, you want to be coming back probably, if I had to guess, like right around that roll higher. You're going to be looking for a seasonal low for the summer trade. I would expect it around the 8th to maybe even the end of the month of May for that big summer trade. And of course, as a bull, you want to get it down as deep as you possibly can. Like, I love the idea of 667. But I don't, sometimes you don't get what you want, right? I'm a cheap fuck. So, but if there's like a monthly low next month, 667 doesn't sound too bad. And I haven't even looked yet at the monthly tick, but we won't know it until where price shows us at the end of the month. But we'll put in a monthly tick for the beginning of the new month. And I assume that's going to be down there in the 67-ish. So if there's even a moment with some kind of doom next month, to catch that low for the summer trade, most bulls here are probably going to be sitting on their hands. You can intraday trade this stuff, but most like real buyers are going to be looking for a monthly low in May to get long for June, July. And I would just say to you that when I showed you earlier that 2022 trade, that you must be patient in May specifically to catch that fucking low. Like, where is that low? You're going to get a ton of like, if we're trading at all 715, 720, we get news that there's a ceasefire, right? Everybody's fucking popping champagne bottles. Everybody's woo, market's going up. And all you're thinking is, and I'm doing the same thing right now. All I'm thinking is up. That's why I had the puts set up, because I'm looking for that trigger to put them on. This looks pretty good right here. I like this. Let's watch this here. They're buying this. The only point that I'd make to you on this would be that there's gonna be a lot of buyers, like a lot of patient buyers are looking for a major low in May. And so just be aware of it as we head into next week. And it says it's not as important right now, but it gets really important, Monday, Tuesday. It gets pretty fucking important. And the other triggers would, of course, be the other triggers for that would be if we don't catch it from on like today into Tuesday, that anything that's like good news, like big tech reports all come in, SPY squeezes up at like 4:12 in the afternoon, and you and I are trading zero dates, and meanwhile we should be trying to put that hedge on into those highs, not in regular cash market, but at like literally the fucking close. You got to be quick with this shit. Like, I can't press upon you enough that when we come into these moments of like we're buyers or sellers or buyers or sellers, the market will attempt to do like the highs and lows when you least expect it. Oftentimes near a close. So just be aware of that as we move forward. Expectations from now into Monday, right here. Target price Monday open 717.78. Or Monday. It'll either be Monday or by Tuesday, let's call it. I do expect that 417 to get slapped at some point. But remember, we're close, man. I can't say it. Like the high already today was 716.59. That's fucking 12 cents from fucking 7180, isn't it? It's pretty goddamn close. 20 cents less than that. 15 cents from the target. So we're getting a little like, just a little like longish in the tooth. And if that's the case, and we are going to go higher, it's likely going to be on some positive volatility that immediately gets sold into. So just be aware of that as we move forward, and that window closes the closer we get to Wednesday and beyond. So if you're a bull, you're wrapping things up. You're looking to sell calls. You're looking to maybe get some puts, whatever it is your poison is. And just to price in that volatility, even if price doesn't go there, you're still going to get the buildup. And I just looked at the chain, like the chain for next week into the first. They probably need to roll at least another week, if not into the end of May. They need to roll, and there's no bid on anything past the first, so they're all going to be forced to roll their shit out into the 8th fucking end of month of May, and we don't know how they roll yet. We're not going to see. We don't know exactly what's coming off end of month, and we don't know what's going to come on at the beginning of the month. So just the top line on that is don't fight the fucking tape in May. Please don't. You're going to get excited. We're all going to get excited. Be like, oh my God, who cares about no oil shock and all this other shit? And then what you're going to do, you're going to find out is that you're going to be left holding the fucking bag. And we'll get a nice net, something fucking negative, stupid negative is going to happen, and they're going to tell you the world's going to end. We're going to go down. And that's kind of where you want to be, Johnny, on the spot. Like the mantra for you as a bull should be, I need to find the monthly fucking low for May. That's all you need to know. If you find out where the monthly low is for May, you're going to be styling, and you're going to be able to grab along, and you're going to take it up in the summertime. And the only other thing I'll tell you here would be, don't be afraid of summer. Don't be afraid. You just need to know where the low is, and then we'll take the summer trade. And even if we roll down for fall and we don't get above, let's say 730 or something, we go back down and squirrel around for the fall and price all that shit in. It all still ultimately leads to fucking vertical. It does. Vertical. Fucking vertical. You should expect the market to go vertical. And you do not want to be left behind on that. And that I'll say that again too when we get into the fall, into the winter, because when we are done, right, we're gonna get hit. When that inflation fucking gets out of control, we're gonna get a bear raid. And whether that's in the fall or the springtime, when we actually do price that shit in, like late summer, midsummer, maybe it like retards the upside targets for summer, and then you're getting hammered and no real true big up unclench until the end of the year. And even then, if they price it in the fall, like late summer, fall, cool. If they don't, and we have to deal with it in the springtime, it could be a major bear raid, right? Trade 760, 7800, and then we're fucking, jackknifing down for just like we did. And remember too, last year we had one of those moments in the springtime, and that was it. I don't see the same for this year. I think they become more frequent. I think as we get closer to the real top, it's going to be like, vertical, slam down, vertical, higher than before, slam down, vertical. You'll see more frequently, at least like twice a year. So just be conscious of the monthly low for May to get your summer trade on. And you don't want to be left behind in that trade because when you get into the summer doldrums, it sucks. It's great trading. You make good money in summer doldrums, but it really sucks to be a directional trader. It's like a day trader's market in the summertime. And there's no money. Everybody's on vacation. Wall Street goes parties, man. They go to the fucking island, dude. So you'll be the only one trading. There'll be no money. Things get repriced. So yeah, you want to find that May low so you can get that nice fat summer print. It feels good. I'm going to leave you guys with something here, okay? You write this shit down. Like, this is to write down. When you get left behind in the summer trade, it's not only infuriating, but you get eaten alive normally. If you're like a directional trader, you need to get that May low, and you need to like run that shit up so that you can take your summer vacation and chill. What ends up happening is a lot of traders are directional. They miss the May low. They read all the fear and the doom and all that shit, and they're too afraid to buy that May dip, and they get left behind, and then they get caught in being a directional trader. That I missed out the bottom and the spring low. Now I missed the May low for the summer trade, and then you're like, I think it's gonna go higher again. We're gonna go moon. And they just eat you up there. You just get hammered. It's brutal. It really is. It's fucking brutal. You don't want to be that fucking trader. It's a sucky existence. Let's watch this close here. Let's see if we can get a little bit of a squeeze up in the close. I still haven't gotten any zero dates yet. We're coming into 350 right now. We'll see if we get this here. See if they run this fucker up.
To begin the market and close imbalance data.
Let's watch this closely here. Let's look at those calls again. Hey, they're at 6 cents. Whew, thank God I didn't fucking buy those.
Ten seconds.
Oh yeah, pop it, pop it, pop it, pop it.
Market on close imbalance. S&P 500 buy side 940 million. Nasdaq 100 buy side 808 million. Dow 30 buy side 387 million. Mag 7 buy side 367 million.
Yeah, if you're a bull, like top line, your whole focus should be how deep. Like if you're a bull, listen to me closely. Like top line, if you're a bull, if you're a buyer, if you're a directional trader, that's the easiest trader to be, right? You're just looking for a May monthly low. It's that simple. You're just sitting on your hands for the month of May, the start of May, and you're just like, give me a fucking low. Be just like the street. And the street doesn't want to buy highs in May that they don't want to chase. They'll scream, bitch, moan, and they'll just fucking sit in their hands. Even if they have to wait until the last goddamn day of May, they will. They will not buy it. You remember in October when we closed? Like everyone called for October to be a bad month, and we ground up. We traded it all the way up together. And then we came in October 31st, and I said, hey, I'm going on vacation. I'm going to New York City. Was it New York? I don't know if I went there for New York. I don't know where I went, but I went on vacation. And I said, well, get back for the month. Was it? No, it was September. Excuse me. Yeah, it was September? Or I don't remember what the fuck it was, but I think it was, we traded up for October 31st. And then I said, hey, we'll watch November, and we'll look for a dip to buy the first week of November. And we didn't buy it. And then it went down more. And then we waited, and then went down more, and then we waited, and then we waited down another week. We waited, and then the end of the month, we didn't get a buy-in. So, you know, even if we're up in the beginning of May, the street will just sit there on their hands. They'll refuse to buy shit until they get the price they want. So the mantra for you as a bull should be, I want to put a summer trade on. I'm looking for a May low, and I'll take the fucking deepest low they give me. You should be hoping for the best low you can get. And if that's 67, if it's 700, if it's 680, 690, whatever it may be, I will watch the market with you for the entire month, and we'll put the trade on together when we get it. We just put that monthly fucking trade on. We'll run that fucker up right in the summertime, and be happy as fucking pigs and shit. That's right. And we'll take that trade together. And then when you get to that summer doldrums, man, you won't care. You won't care if we roll early. You won't care if the doom cycle starts up again with pricing in oil shock and all that other bullshit. You'll have all your fat money. You'll be like, oh my God, bring on the doom. Let's get us down to a deep correction for the fucking fall. And you're going to be a happy camper again. You'll be buying that big dip in the fall, run this fucker up into the end of the year, and then we'll deal with the bullshit in the springtime, or in the winter spring trade, doom trade that comes every fucking year. But remember, you want to stay with the street, and that's the key here. Is that the street is thinking the same thing. The same shit I just told you is exactly what they're thinking, and it's so much easier to trade with them. So much easier. Oh, thanks, Gladriel. Yeah, just like when you like just looking for just think to yourself, monthly low for the merry month of May. And you guys remember? Any guys in the military? How'd that song go? There was a girl who wore a yellow ribbon. She wore her yellow ribbon in the merry month of May. And if you asked her why the hell she wore it, she wore it for her soldier who was far, far away. Far away. Far away. She wore it for her soldier who was far, far away. She had a dad who carried a shotgun. He carried that shotgun to keep that soldier far, far away. Far away. Far away. Her father carried that shotgun to keep that soldier far, far away. Fucking merry month of May. There you go. Keep on squeezing. Keep on fucking squeezing, baby. Get right up into that green fucking line up there. Close that fucking shit up there. Higher. Pump that fucker. Get in the money on 715, please. You guys remember that song? Any of you guys ex-military know that song, right? Love you too, Sunday never ends. There's more verses. I forget them now. I think my favorite one was always the lump in a log. Lump in a log in the bottom of the sea. What is it? How does it go? Anybody know that song? I gotta remember. Hey. I think she remembers it. I'll ask her. She was in the army too. My wife was in the army. They said there weren't any hot girls in the army. That's a lie. I think I got the only hot girl in the army. I didn't actually believe she was hot when her sister told me that she was in the army. I was like, no fucking way. There ain't no hot girls in the army. How does that song go? Yeah, like a bump on a log. So it is like a frog and a bump in a log and a frog in the bottom of the sea. I forget what it goes, how it goes. I gotta try to remember it over the weekend. What's the other one that I sang to you there? Didn't get the words to this one. Yellow Ribbon. That's what it's called. Yellow Ribbon. They got this one's for the Marines. So I guess Marines I forgot about that. When I was in the army, like the Marines, they had songs. They just weren't allowed to sing them. Whenever they marched around me, they'd be fucking getting fucking right-faced march somewhere, and they wouldn't let them sing in front of. If they saw an army soldier, they wouldn't let them sing hymns. Oh, no shit. Borderlands video game. There's a legendary shotgun in the game Borderlands 3 or 4 in the search results called AC May. This gun is described as a rare, dataless, heart pattern-filled weapon often found as a world drop. I guess it's related to that song. Get up there and close on fucking 715 and 36 fucking cents right now by the close, goddammit. Get up there. Go. We know where you're closing. It's right here, asshole. Get up there. Squeeze. Big old green bar. Put those fucking calls in the money. Yeah, snap that shit up there. Big green fucking bar. Slap that fucking ass. That's a Rich Pravorsky rage yell right there. That's Rich Pravorsky screaming right now. God damn it. I bet you Rich is like slamming the fucking sell button right now. He's in the boiler room right now screaming at his traders. Sell all futures right now. Okay. Another programming note that I am working over the weekend. We'll be here around all weekend. I'm still working on this office and stuff. Still got problems. I got to go over to fucking. I got to go over to Micro Center again. I think I'm gonna bring him my computer and say what the fuck. Let's see what's up. I'll see all of you guys on Monday at 9:30. I'll be around, so if you ever want to ping me or something like that, I'll be around all weekend. I'm still working, so I'll be here all weekend. I'll be around. I'm so frustrated right now at that stuff. I don't even want to think about it. It's the weekend. I wanted to start the nighttime show this week. I had all kinds of plans. My plans are getting torn up.
Extend the record winning streak to 18 sessions.
I feel like what do you call it? Like a chip producer. Yeah, it's coming, bro. Eventually. Oh yeah, we're gonna make tons of promises. I need to get my leather jacket on and tell you we're gonna have that show, and it's not really starting yet. It's like
And seeing Intel shares closing up for 24% for the best day since 1987.
Hey, 1997. Best day since 1997. We talked about that earlier. In the last year or two, like now we're in 97, 98. In the end of the bull run. It's walking, talking, smelling, acting, talking, chatting, looking just like a duck. Late 90s, baby. You guys all have yourselves a great weekend. All right, I'll see you on Monday. Later, guys. If I can try to put a stream up this weekend, I will. If I see anything, I'll be here all weekend. So like maybe I can't promise shit because I got fucked up shit going on. But if it's going, I will run some pilots, and I will focus on tech earnings next couple weeks. So I'll either post the videos for you in the Discord for you to critique and tell me I suck, or what to improve over the weekend. If I can't get it up and running, I can't get it done. But I really want it to launch like right fucking now. Like I wanted it done last week so I could do earnings season and focus on earnings season on that night show. So we're not there right now. Okay, I'll be back. I'll see you on Monday, 9:30 in the morning. You guys have a great weekend. Be kind to each other. Be kind to people outside. It's springtime for most of the country right now. I know some of you have already been springtime. For the rest of you in the northern part of North America, you should be hitting spring right now. And get out there, touch grass, get some sun on your face, come back with a tan on